Ladies and gentlemen, good morning. Welcome back to the second day of our workshop. We hope that you had a relaxing and enjoyable evening last night. Today, we will continue our discussions under the theme of enabling green and digital transformation for SMEs. So now, to lead this session, I would like to invite our moderator, Mr. Peter Morgan, Senior Consulting Economist and Advisor to the Dean at ADBI. Ladies and gentlemen, please welcome him with a big round of applause.
Thanks very much, and good morning. Again, I hope you all had a good rest last night. So I think this session is going to cover one of the more critical recent topics, which is financing SMEs for a sustainable green transition. The session will explore the critical role of financing in supporting SMEs' transition to a green economy. As SMEs face increasing pressure to align with environmental standards and adopt sustainable practices, many struggle with financial barriers such as limited to access to green credit, high upfront costs, and also employment capacity. This session will discuss the latest trends, policy frameworks, and financial instruments. Some of the key topics will include green finance mechanisms for SMEs, including green loans, sustainability-linked bonds, and blended finance models, corporate disclosure requirements, and the integration of ESG factors in SME financing, regulatory frameworks, and policy incentives to promote SME engagement in the green transition, and finally, some case studies on successful green SME finance programs in the Asia Pacific. So again, we have a very expert panel. I'll just make brief introductions because you can get the full bios from the QR code as mentioned earlier. But we'll have first two online presentations. The first one will be by Professor Sayuri Shirai of Keio University. She has been the Asian Development Bank Institute's advisor for sustainable policy since October 22 and is currently Professor of Economics at Keio University's Faculty of Policy Management. She's also an advisor to both the Nomura Research Center for Sustainability and the Nishin Oilio Group. And she was a member of the Bank of Japan's Policy Board from 2011 through 2016. And then secondly, we'll hear from Mr. Dennis Wan, who's head of Capital Markets APAC at CDP. He heads the frontline team engaging with regional financial markets actors and stakeholders for CDP, an NGO running the world's largest repository of climate change, water security, and forestation environmental data. And then we'll have Ms. Nadia Zainuddin. She's currently the General Manager and Head of Market Structure and Policy of the Securities Commission of Malaysia, where she focuses on structural and regulatory measures to facilitate better capital and financing access for SMEs and building a pipeline of companies for the public market. And then finally, we'll have Mr. Nick Cameroon, who's Senior Policy Manager, SME Finance at the Alliance for Financial Inclusion, or AFI. The AFI is a policy leadership alliance owned and led by member central banks and financial regulatory institutions with a common objective of advancing financial inclusion. Nick advocates AFA members in SME finance and Islamic finance policy and work streams. So, as I said, we'll have the first two presentations online, and then I'd like to invite our in-person speakers to present from the podium over there. So each presentation will last about 15 to 20 minutes, and then we'll have some Q&A at the end. So I'd like to now invite Professor Shirai to give her presentation. So Sayuri, the floor is yours.
Thank you very much, Peter. Let me share my presentation file. Good morning. Thank you very much for giving me this opportunity to talk about green finance and SME disclosures. In order to discuss about SME, I need to talk about this broader perspective, including large and listed companies, and then I will try to explain where SME fit into this landscape. Okay, so everybody know each country needs to cope with physical risk, which is already materializing. So we are already facing climate change-driven disaster and extreme weather conditions. So we need to deal with mitigation to reduce GHG emission, but also we have to promote companies to take adaptation action to cope with climate change. Now, in order to cope with this kind of climate change issues, the government really have to do their policies, especially green industrial policies, carbon pricing, regulation, taxation subsidies to promote decarbonization is really essential. But in addition to that, in addition to government industrial policies, the green financial policies are equally important. Because when a company try to change their business activities and try to reduce their GHG emissions, the financial sector and investor needs to provide finance to new capital spending and innovation. So this industrial policy and financial policy have to go together. The financial policy, it means in order to promote private sector's finance, we need to really standardize the disclosure of information. Taxonomy is also one important issue to increase issuers and investors' base, and also how to cope with greenwashing countermeasures is also quite important. Having said that, let's look at the financial channel. So for the companies, including large companies, there are three sources of financial channel. So one is capital market, which includes stock and bond. Here, investors, asset management, they can create green index and incorporate eligible companies, and also they can do engagement voting rights. So capital market is really important, and a lot of Asian countries now pay attention. Standardization of climate-related information is very important to develop capital market. But also the banking sector is very important. Lots of SME depend on banks, so promoting banks to finance decarbonization activity of companies, including small and medium enterprises, is also important. However, when we talk about what kind of information is needed suitable for capital market and banking system, there are some differences. So of course, disclosure is important, but maybe some emphasis can be different. Okay, so but capital market and banking sectors are area we at ADBI focus a lot. Also, there is a third channel, which is a direct investment in a carbon project, such as blended finance, various public-private initiatives. For example, JETP was initiated by G Funds, the Global Financials Group, aiming at the net zero portfolio, and together with some developed countries like Japan, US, and Europe, with private sector finance. So usually when we talk about blended finance, it's possible to include SME, but this finance is usually including public sector's finance, so such as MDBs, World Bank, ADB, or like a government like Japan or US and Europe. And then unfortunately, in terms of JETP, just Energy Transition Partnership, which was created in Indonesia and Vietnam, South Africa, Senegal, I hear that a lot of monies are not really flowing in. So committed money from some advanced country, I mean like US, and also some commercial bank is not coming in. So pledged amount pledged amount is not coming. So there is a problem issue, how to bring a public sector finance to promote private sector finance. So I think we really need to seek for more standalone type of financing. So that's why capital market and banking system, is very important. The new trend is a carbon project, like a carbon credit and carbon market. I'm just writing one paper for the ADBI recently, and there are two types. So one is Article 6 project. This is again, this is a promotion of various carbon projects. Low emission decarbonization project, usually conducted by developed country and developing country. So it's not really standalone. The voluntary carbon project is basically based on the private sector initiative. This is one area we can pay attention to. So corporate sector who are committed to the net zero, they can purchase third parties carbon project, which can be conducted by SME. So this is a broad picture. But to summarize how SME fit into this climate financing, so one area is listing. Some small companies are listed on the stock exchange. So it's dependent on the countries. Okay, so some relatively large SME can get funding from by listing. The most important one, as I mentioned, is a bank loans. So paying attention to banking system and then encourage banks to provide climate finance is very important. And the third one, as I already mentioned, the carbon offset project is a new area of finance. Now, as I said, to promote financing for climate, we need to promote disclosure because private sector, they pay attention to the returns and cost. So unless they can get some returns, they never provide money. So disclosure is very important. So this is a global trend in terms of disclosure. So now we have ISSB, International Sustainability Standard Board. This created the global standard in 2023. So from last year, some countries started to recommend or mandate these disclosures. So initially, there was a TCFD guideline. This was a starting point led by G20 and FSB. And now ISSB took over this TCFD guideline. So ISSB is becoming a global trend. So I mentioned about 13 Asian countries, including Korea, is considering to implement either recommending or mandatory. Just yesterday, Japanese government decided to mandate this ISSB disclosure, but their target is primarily on prime market, so main board. So not all listed company will be subject to mandatory requirement. So mainly 1,600 prime market listed company will be subject to this mandatory requirement, but in a phased manner. So starting with very large company, over many years, they are going to apply this disclosure requirement to the prime market. Also, EU has a little different standard. It's much broader and a more detailed CSRD standard, but this is also very important. So, and California is going to apply sort of TCFD-based disclosure, including Scope 1, Scope 2, Scope 3 from 2026. So globally, we have these three type of disclosure requirements. So ISSB is most important, but also EU CSRD, because a Korean or Japanese company who are engaging with businesses with EU are also subject to this requirement. So EU CSRD is very important. Also, California, the Korea or Japanese company which are doing businesses in California also have to disclose climate-related information according to California law. So I would say globally there are three important disclosure standards coming. Let me just mention what's happening in EU. Recently, at the end of February, EU European Commission came up with this omnibus package. The essence of this package is to try to reduce reporting burden to the SME. So in the past, according to the EU, quite a large number of small medium enterprises which are listed on the stock exchange were supposed to be subject to this mandatory corporate-related disclosure. But I guess it was too much burden for the SME. And so according to the European Commission, they just decided to exempt the small listed companies. So you can see there's a threshold here. So now a listed small company are out of this mandatory requirement. And other companies, they still have to comply with the CSRD disclosure, but more simplification is happening. Also, 2-year postponement of reporting is happening. So same thing happened to the other due diligence directives. So this is nothing to do with US trend. It's just the European government felt too many disclosure requirement is really damaging competitiveness of European companies. So they are trying to simplify emission issues. Okay, so what will be the most important for not only for the large company, first of all? GHG emission data will be most important. This will be covered in 3 global standards, ISSB, Europe, CSRD, and California. So as you know, GHG emission data is decomposed into scope 1, which is direct emission coming from companies' own production and operation. And scope 2 is indirect emission coming from purchased electricity. And scope 3 is most important. This is coming from emission related to the suppliers, upstream and downstream. So for the large company, they are subject to the mandatory requirement. So they are supposed to disclose all scopes 1 to scope 2, scope 3. Where SME coming in? So SME are unlikely to be subject to the mandatory requirement, but a large company needs to get information from small, medium enterprises, scope 1 and scope 2 data through their scope 3 emission data. So this is a detail of scope 3 data. Scope 1, scope 2, not very difficult to calculate. The most important data for the large company is a scope 3. So upstream to downstream, 15 categories. And SME, many of the SME fit into somewhere along these 15 categories. So although SME are not subject to the requirement, but large company will ask small, medium enterprises to give them GHG emission, at least scope 1 and scope 2. So in that sense, SME will be still have to apply, still have to disclose this data. So finally, I just want to point out, so this is up to the countries. So what is the scope of companies which are subject to reporting requirement? As I said, in the case of Europe, in the past, they wanted to apply to all listed SME, but now they are exempted. So you have to think, that's up to each country, whether you are going to apply listed to requirement to the listed SME as compared to large listed company. That is up to each country. In the case of Japan, because it's only applied to prime market, small medium enterprises, listed companies are exempted. And another question is, if suppose you apply disclosure to the all listed company, then they have to discuss whether you still want to apply climate disclosure to unlisted SME. Some of the Southeast Asian countries, they also apply to some large unlisted company. That is very good, but that is not going to happen in the case of Japan. So it's up to each country. So depending on each country's industrial structure, what is the scope of company will be different. Another issue, when a large company discloses scope 3 upstream, downstream suppliers data, there are so many layers of companies involved. So how many layers you want to include as a supplier? That's at this moment leave it to the company. So maybe government have to give some guidance, to what extent the large company have to get data from suppliers. So that's also leave it to each country's discretion. So that is also you need to discuss. Finally, banks I said the bank's loan is very important. So banks have to get the data about their, financing, their invested companies' data. Because banks have to disclose finance emission data. So small banks, they have to get data from SMEs, companies, their financing companies, GHG data, at least scope 1, scope 2. So to conclude my presentation, SME are unlikely to be subject to the mandatory disclosure directly, but they still need to prepare for the at least GHG data, scope 1 and scope 2, for the large companies, other suppliers, or through finance banking system, giving data to the banks. So this is what's happening at this moment. Thank you very much.
Okay, thanks for a very nice presentation. So we'll now move on to the second presenter, Dennis Wan, who's head of capital markets APAC for CDP. So Dennis, the floor is yours.
Thank you. Thank you very much to ADBI and KODIT for inviting me today. I'm just going to share my screen. That's Professor Shirai's screen. There you go. That's my screen. Thank you very much, Professor Shirai. Thank you for that wonderful introduction there in your presentation, Professor. I'm actually going to build on many of the elements that were just explained there. Standardized disclosure, scope 1, 2, 3, how finance can help. So the specific title of this presentation is about one particular kind of case study, sustainable supply chain finance. Oopsie. I trust everyone can see me right now. I'm going to explain who CDP is just for the start of this presentation. Just in case. CDP is a global nonprofit running a global environmental disclosure system. That might not mean quite enough to you. So let me explain the history of CDP. 25 years ago, 3 young people were thinking to themselves, how can we help the environment? And they realized that individuals can't have that much of an effect on the environment. If we use a plastic cup or a ceramic cup, that doesn't hurt the environment that much more, and it doesn't save the environment to decline it, because companies are the amplification of individual impact. It's the way that companies produce, the way that companies waste, the way that companies sell things to us that we don't really need at scale. Over 150 years of unbridled capitalism, that's what caused the environmental crisis that we're in. And what companies need to do is be more transparent and accountable for their environmental impact. So the 3 young people went to the companies and said, why don't you disclose your environmental impact? We will help you measure it. The problem is that big companies don't listen to 3 kids who are trying to set up a charity. So the next idea was that the charity would go talk to finance, big finance, banks, asset managers, and say, why don't you ask companies to disclose on a standardized manner on your environmental information? 20 banks asked 200 companies to disclose environmental impact. And over 25 years, with the advent of TCFD, with the Paris Agreement, now with ISSB, CSRD, many, many acronyms that we've just heard about, then CDP has grown to over 700 financial institutions asking the entire world to disclose environmental data. Over 25,000 companies disclose environmental data to CDP on a yearly basis, 2/3 of the listed market capitalization of the world, many of whom are SMEs. SMEs are the cause of a great deal of the scope 3 of a large company. To recap what scope 1, 2, 3 is, scope 1 to a company is the decisions that they can take in-house. It's where they print their paper. It's where they drive their cars. Scope 2 is where they get their power from. But the thing is, if you buy electricity, you think you're clean, but if the electricity is created by burning coal, burning oil and gas, then that also causes carbon emissions. That's why scope 1 and scope 2 are easy to calculate, as Professor Shirai said, but they are small compared to scope 3, which is where you buy your goods from, your upstream supply chain, and who you sell it to or invest in, your downstream scope 3. This graph actually demonstrates that across different industries, the size of scope 3 greater than scope 1 and 2 varies. In manufacturing, then that dot there says that scope 3 is 20 times greater than scope 1 and 2. But in retail, then that number can be up to 92 times greater, because of where a retailer has a very, very long supply chain full of SMEs. Finance is not on here, but finance's number would be thousands of times greater, because finance's industry is investing and lending money, which looks clean, but they are investing and lending into the real economy, which has an impact on nature, and that number is thousands of times greater. And how much do big companies understand what their supply chains are doing? These are the purple and the red bars here. Not very much. The companies that are industries which are looking into scope 1 and 2, exactly what's under their control, they are the purple bars. There is a bit more understanding what you're doing in scope 1, 2 than there is in scope 3. In scope 3, then the number of companies who are looking at what's going on directly in their supply chains is much lower. Some numbers on the right-hand side there say a quarter of companies really understand what's going on in their supply chains amongst all of their SMEs. Less than 50% of their buying power is really interrogating their supply chain. Less than 40% of their supply chain emissions are really, really understood. So what are the dangers, but what are also the opportunities of that? Because we collect so much data, 2/3 of the listed market capitalization of the world, the largest companies in the world, and also their supply chains on standardized disclosing basis, then what is reported to CDP are massive numbers. At risk is the top level there. 162 billion of risk in climate, 77 billion of risk in water, 68 billion of risk in forest kind of exposures. And what are those risks? Those risks are acute physical, those risks are customer changing preferences, those risks are regulation coming at them. But the number that's interesting is underneath those, it costs much less to address the risk first. Only that number of 162 is 3 times greater than how much it would cost to address the risk. So 55 billion to spend in order to address a risk of 162 billion. And the bottom row there shows the opportunities that could be realized. Again, if you have opportunity to realize of 242 billion, but you only need 4 billion, 4 times less than that. 60 billion to invest in order to realize 242 billion of opportunity, that would be a good investment. That is the opportunity for business to unlock in this nexus between environmental risk and business. So back to the original title of this presentation, Sustainable Supply Chain Finance. I need to explain something that is business as usual in banking at the moment. There are banks in the room, I know. There are regulators who regulate those banks, governments who are interested in the banking system in your country. This existing problem has already been solved and is marketed as a business as usual instrument since 2008. What these players at the bottom are players who are in your economies. There are buyers with many suppliers, SMEs, so many supply chains. What buyers want with their supply chains is longer payment terms. I don't want to pay you immediately. I want to hold my cash for a little bit. What suppliers want is to be paid very soon because they have little cash. On the other hand, what buyers have is very good credit ratings because they're often big companies, whereas suppliers really don't have access to easy working capital. So banks came along and saw this dynamic and said, you know what, let me serve you both. Let me come in, pay the invoices early, but let the suppliers borrow from me and borrow from me using the credit rating of the buyer. And everybody now gets what they want. The suppliers get their money early. They also get advantageous financing because they are using the credit rating of the buyer rather than credit rating of themselves, an SME. So this has actually taken off. Big banks offer thousands of clients in their buying clientele this kind of product with millions of suppliers, millions of SMEs in there, and everybody gets what they want. Banks get business as well. If you add one critical element here, which is a key performance indicator in the environment, then you could encourage millions of SMEs to behave better environmentally, and the buyers themselves would be solving their environmental scope 3 exposure, plus the banks themselves would be solving their scope 3 exposure as well. Remember, I said that the buyers themselves have 90 times greater scope 3 than scope 1 and 2, whereas the banks have thousands of times greater scope 3 than their scope 1 and 2. And a lot of that scope 3 is down in the SME supply chain. But what you need in order to solve this, add that indicator, is standardized disclosure, environmental indicators. And once you start encouraging millions, thousands of companies and all banks to move in the same direction, you can have wonderful things happen. I'll quote you a case study now. In 2015, a major buyer, Walmart, you all know Walmart, decided to try and save 1 billion tons of carbon from their scope 3 operations by 2030. They set themselves 15 years to try and do this. They'd already been disclosing to CDP, so Walmart has standardized environmental disclosure. They've already been asking their own suppliers to disclose on CDP, so they knew the standardized environmental disclosure of their supply chain as well. But they added a bank. They added a bank which already had supply chain finance for all of their suppliers and said, let's start giving discounts on financing to my supply chain if they disclose to CDP and they perform better and better. So since CDP has scoring, on DCBA, on how well you do your disclosure, then they were able to link all of these things together. The great news is that Walmart will achieve their 1 billion tons of carbon reduction in 2025, 5 years ahead of schedule, because they have been pushing everyone together, finance and environment and their supply chain, all in one direction to achieve great things faster than anybody could have expected. And SMEs are key to this. From the history you heard of CDP, you will understand that we have grown to be a highly thorough disclosure system. If 2/3 of the market capitalization of the world discloses to us, and there are so many disclosure regimes, you heard them from Professor Shirai, the CSRD, ESRS, the ISSB, the TCFD, the TNFD, it goes on and on and on. And these things are already very heavy lifting for big listed companies, the buyers. For SMEs, it's beyond being able to do. So in 2024, CDP, being a leader in this space, designed a far smaller SME questionnaire. We go from 450 question bank down to less than 50. The key essential things that an SME needs to consider. And things were borne out by the reaction of the world's SMEs to us. Over 12,500 SMEs disclosed to us in our last season across 130 countries. 55% of them said this was a much better experience than they were already disclosing to CDP, but had to deal with the large disclosure. Now they've got a small SME way to do it, and 55% said this was much more doable. And the other exciting outcome of, if you've already been disclosing to CDP and all of the things that we ask, then when those mandatory requirements come in Japan, as Professor Shirai said, in the Philippines, in Hong Kong, then you're already ready for mandatory disclosure because you've already been disclosing in a standardized, highly ambitious manner. From the point of view of the SME itself, never mind the cheaper financing that drives them from a business perspective, this takes them on a journey. Even if they don't know what they're doing originally, environmentally, then being asked to measure so that they can manage establishes a baseline from which they can do better. And then, as anybody who has ever studied or tried to do an examination, when you practice an exam, when you practice questions, then you learn even when you don't know what's happening. You will build capacity. You will be able to set yourself targets for doing better. So there's a upward, rightward, north, east journey that you can go on here by starting to disclose and then realizing these are things that I can do better. So to summarize, what's all coming together in the SME finance nexus, and certainly one of the things that's very exciting in sustainable supply chain finance, is that the identification that suppliers and SMEs don't have enough finance, never mind the environment. Because of how complex supply chains are, then buyers really need a standardized way to look into their supply chains and say what's going on in there. And a reminder that scope 3 is many, many times greater than scope 1 and 2. I'm sure you will get access to these slides later. That 26 times here is just an average. It really depends on the industry that you're in. In manufacturing, that 26 times was the number, but 92 times is the number in retail, thousands of times in finance. So how do we make it a success? How do we make it that you don't just take this presentation and think, well, that's a good idea, but I don't know how to do it. So we've seen through 25 years of our history now, working with the finance houses, working with the buyers, working with SMEs, when it will work. And it will not work if you only talk to one party. It's a whole of economy, whole of company solution. There are folks in companies who didn't think about the environment. If all you did was speak to environmental people in a company, they don't really have their hands on the money. There are procurement people who care about the supply chains. They can be involved, they must be involved. Treasury people who previously have only thought of lower cost of capital, but if you gave them the good news that lower cost of capital could come from measuring environmental performance, then everybody would be working together in the same place, as long as there is standardized disclosure, all looking at the same management information. You've got to integrate sustainability into business. It is now accepted that climate risk is financial risk. So we need to bring that management information all together. And you can't do everything all at once. Supply chains of big companies are very, very large. But you can say that this amount of procurement spend is more important, and do it in phases. So segment the suppliers into most impactful, biggest spend first, and then work your way down. That would be another recommendation to how to make this successful. I leave you with some of the examples of where environmental data through CDP is being incorporated into sustainable finance here. You will see in the third box there the exact example I gave you, how Walmart achieved 1 billion tons reduction of greenhouse gas reduction, but with the help of HSBC using CDP as the standardized measure here. SMBC will stand out there because one of the really welcoming findings is that because CDP disclosure is so prominent in both Japan and Korea, especially in Japan, where 97% of Nikkei 225, 80% of the topics 500 discloses to CDP, there is standardized environmental data everywhere. 1/3 of all sustainable linked bonds that have been issued in the past 2 years in Japan have referred to CDP scores and data. Thank you very much for your attention. I look forward to the questions later.
Yeah, thanks very much for a very interesting and stimulating presentation. Next, I'd like to invite Nadia Zainuddin to give her presentation on the Malaysian case. So can you go to that podium over there?
Good morning, everyone. So following the 2 presentations from our panelists online, what I will do now is share with you Malaysia's experience in promoting climate disclosures, not sustainability disclosures, including climate, for our companies. And this includes listed and non-listed companies. So I will cover 2 frameworks. One is a national sustainability reporting framework, which is applicable for listed companies and large non-listed ones. And in the second half, I will cover the simplified ESG disclosure, which I mentioned briefly yesterday, and that is targeted more for the SMEs. So the National Sustainability Reporting Framework, it was launched by Malaysia last year in September. And why I'm sharing about the NSRF in short is because if we look at the segmentation of companies, you've got listed companies, and if you cut it just by half, you've got the non-listed segment. And in that non-listed segment, you'd have the SMEs. But in that category, that second half, there are also large non-listed companies, some of them even larger than those listed on our growth markets, which we also still need to capture. So the NSRF, what it is a roadmap on how Malaysia will use the ISSB Sustainability Disclosure Standards, the S1 and the S2. So the decision that was taken by the committee that led the development of the NSRF was we would use the S1 and S2 as is, without any changes, but we had lengthened the relief period for some of the inbuilt reliefs that are used in the standards, and I will explain that later. So the Advisory Committee on Sustainability Reporting, it was set up in May 2023 with the support of our Ministry of Finance. And it's an interagency committee where you have the Securities Commission Malaysia as the chair of the committee, and you have the Audit Oversight Board, our central bank, the Companies Commission of Malaysia, our exchange, Bursa Malaysia, and the Financial Reporting Foundation as well here. The Financial Reporting Foundation is here because they oversee the Malaysian Accounting Standards Board. And because the ISSB is the sister body of the IASB, we see the links here in terms of thinking about who would be the future local standard setter then for Malaysia. So it was important to include the FRF, the Financial Reporting Foundation, and the MESB from the start. So the mandate is really to look at would we adopt it, should we adopt it, and the decision was yes to the first two. Also, what would be required for us to support use of the standards, because it will not be easy, it will come with challenges, it will come with capacity building. Together with that, in order for investors to then trust the information that's being disclosed using the standards, how would we look at sustainability assurance? So from the onset of the setting up of this committee, this was what the committee needed to look at. After public consultation, targeted engagements, including conversations with the ISSB itself, we rolled out the framework, the NSRF. And you can see here, the target segment are 3 groups. Group 1 are all our large listed companies. The larger listed companies, and you can see from the cadence here, it's a staggered approach. The larger listed companies will use the S1 and S2 first, starting from 2025, but it is with a climate-first approach. So they will use it for climate disclosures only at the start for 2025, but with a later disclosure for Scope 3, which only kicks in 2027. So climate first for 2025, 2026. So they will use S1 so long as it relates to climate. So not the other aspects of sustainability yet. But when they hit 2027, this is when they will have to use the full S1 as well as S2. Group 2 are the other listed companies which don't belong in Group 1. So they do not hit the 2 billion ringgit market capitalization requirements. So they fall under Group 2. And so they have a later timeline starting in 2026. And Group 3 is for the companies which are in the growth segment, which is the ACE market listed companies, and non-listed companies, the second half I was talking about, with annual revenue of 2 billion ringgit and above. So these are large non-listed companies. So they are also required to use the disclosures, to use the standards for disclosure starting 2027. It's intentional that it's this way, because even through our consultations, while there are companies that are already ahead, even without this, they already can see that the ISSB standards are coming and we've made the preparations. But for a number of companies, they will need this lead time to adopt the standards. So your question might be, is Malaysia coming in to using the ISSB standards from just, what was it before? What was the requirements before? So prior to this, the requirement has been that our companies needed to provide climate-related disclosures that are aligned with the recommendations of the TCFD. And because the TCFD recommendations are embedded within S2, it's almost like our companies have one foot in already. this is bringing the other foot in as well. So hence, the transition should not be as challenging, but I would not say it's easy, because it also comes with additional disclosure requirements as expected under the S1 and S2. In terms of assurance, we're also, some might say, aggressive, where we aim for reasonable assurance for Scope 1 and Scope 2 starting 2027. The reason why I use the word aim here is because the area in terms of assurance is now undergoing consultation. So the consultation is led by our Audit Oversight Board. So they're speaking with the firms, with the companies to see whether or not we can go for reasonable assurance straight in 2027. Because I think there has been feedback, including a PwC report which was issued recently that said many investors have challenges trusting the information that's being disclosed. There's a lot of information, but they don't know how much of it is really actually very reliable. So as mentioned, we have, and the last line of this is some of the approaches that we're taking. Climate first. We are leveraging all the inbuilt proportionality mechanisms that the ISSB has provided. It's a focus on principal business segments only, and a much more delayed timeline for Scope 3 disclosures. Just as Professor Shirai had mentioned in her opening, in her presentation, Scope 3 is really dependent on the disclosures of the companies within your supply chain. In order for the listed companies or companies within this framework to provide this information. So these were the proportionality mechanisms that the ISSB, so these are not ours. At the top, this is not Malaysia, of course, this is what the ISSB has already provided when they rolled out S1 and S2, right? The ability to use reasonable, supportable, and available information without any undue cost and effort, and where you cannot use, provide quantitative information, you can use qualitative approaches. So these are already inbuilt. But as you can see here, these are the additional transition reliefs that we provide the companies when we roll out NSRF. So Climate First is 2 years for Group 1 and 2, 3 years for Group 3, which is the larger non-listed companies, and likewise for Principal Business Segment and Scope 3. So Group 3 has a longer runway compared to the large listed companies. So for the larger listed companies, the ones in Group 1, there's about 100 over companies there, which have already starting this year. So this is PACE. This is an initiative that the ACSR, the committee, developed as part of the rollout for NSRF. So we can't just tell you, you need to do this and leave them to it. But there is also an initiative to help them cross the river, get to the other side of the river. It stands for Policy, Assumptions, Calculators, and Education. And the focus is really on framework, coming up with model disclosures, using digital solutions, and looking at value chain preparedness. So in terms of framework, we also noticed that a number of our companies have been reporting using GRI. And so creating a bridge for them to understand how to use GRI together with the ISSB was going to be very important. So we have trained 100 accountants so far to understand the GRI better. This is so that when they understand GRI better, they can then help to advise companies also in terms of how to make this transition. And we have also developed what we call the GRI ISSB interoperability module. It's a mapping between the GRI and the ISSB, and it's in the form of a training module. So for example, if you are companies using the GRI, you've already put in the processes, you've put up the disclosures, how will you then use the ISSB standards? There are common elements, and this is what we call Module 6 is meant to do. So Module 6 will be launched mid this year. It's already in the final stages of development. Model disclosures as well. So Singapore has already issued a model disclosure using a hypothetical real estate company using S1 and S2. And this is, so Malaysia is also coming up with what we call pro forma or illustrative reports, but this will be for the plantation and construction sectors, which where there are a lot of companies in Malaysia operating within the sector, so that companies can see what it would look like, what a report using S1, S2 would look like, as an example. Digital solutions, we are also working on a carbon calculator that will be a free public utility tool, which SMEs can also use. That will be launched in May this year. And this is also the last one on the value chain. It segues to my next half, which is how do you sort of prepare the SMEs now for reporting on climate indicators. So this is the part of this is the first half on the NSRF, the mandatory disclosure requirements using the ISSB S1, S2, the timelines and pathway for companies under the NSRF in terms of adoption, and the capacity building support that's in place to help our companies get there. And this was also another element that was included in the NSRF, was its alignment with the Maqasid al-Sharia. As you know, Malaysia has also been very involved in the Islamic capital market space. And the Maqasid al-Sharia is basically the principles of Sharia, which is outlined here. This was developed by the SC, of course, working closely with our Sharia scholars. And the NSRF, the goals under the ISSB S1, S2, in alignment with the Maqasid al-Sharia. Because ultimately, I think what we want to, the messaging we want to send to the companies was, you're not doing this just for the disclosure sake. There's a real problem that we need to address, and there's a necessity to it, and there's really an alignment to also very universal values. So this is included as part of the NSRF book. I will drop a link to it. So the simplified ESG disclosure guide, and this is for the second half of the segment, which is for the SMEs in supply chains. This was developed by an affiliate of the Securities Commission Malaysia, which is Capital Markets Malaysia. They are our promotional arm. And this was developed and issued in 2023. What it is it's really meant to support SMEs in providing starting to provide disclosures on ESG data requirements. So it covers E, S, and G. It's providing the SMEs with a very simplified, very standardized way to disclose, because it can be overwhelming for companies to see which ones do I look at, how do I start, where do I start. So this was meant to help the companies get started. Second was also, as mentioned by Dennis and Professor Shirai, the expectations are anything but increasing now for SMEs to not just embed sustainable practices, but also disclose them. So we need to provide stakeholders with the data. And also to provide policy and principles-based standard setters with also some guidance. I think at the bottom, it's self-explanatory. Why should SMEs use the SEDG? Because it helps them really to respond to the information from their clients on this information, basically, and keep them very relevant. So it consolidates, and that's the active word that simplifies the disclosure requirements that are in the global as well as local standards. So you will see it, the first bullet is the Bursa Malaysia Sustainability Reporting Guide. That's our stock exchange. And also the other global requirements. It was also done through a lot of consultation. It was developed through a number of consultations. And last year, there was the Simplified ESG Disclosure Guide. So that's the mother document. Then we have the SEDG Sectoral Guide. And these are specific guidance of indicators to disclose for 5 sectors, which are listed there. There's also video tutorials in terms of how companies would use these disclosures. And we think the video tutorials are really helpful. Because if you send an SME a document that's 100 over pages long, they're not going to pick it up and go through it. But you make them watch, or you offer videos, short clips, to help them go through the content. I think that reaches the audience better. And we also have to go nationwide with the workshops instead of just focusing just in Kuala Lumpur in order to help to get the reach to the SMEs. And it's also in multi-language because, again, it's the reach. There can be language barriers if it's just in English, so this is also in Mandarin, this is also in Bahasa Malaysia. So this is an overview of the indicators. It's broken down, and it's broken down by leveling, so you've got basic, intermediate, and advanced in terms of what are in each item of indicators that companies should start to think about when they'd like to approach ESG disclosure. And this is like an overview of it. So you will see for each, so for emissions at basic, what would you need to report, scope 1, scope 2, and you go up all the way to intermediate and advanced, and this is replicated across E, S, and G, but it's not left there. So you have for each, for example, basic 1, E1.1, you'd have a description in the SEDG itself in terms of what does this entail, what are the reference frameworks companies can think about. So it has been very useful, and these are some of the adopter program. How it works is we cannot reach the SMEs directly. It's difficult, I'm not saying not, it's difficult to reach all the SMEs. To scale it, what we do is we engage the listed companies because they have supply chains. And therefore, then when the listed companies adopt the SEDG, they then work through companies in their supply chain in terms of adopting the SEDG. So the workshops are, for example, with Carlsberg, Malaysia, and the companies within their supply chain. It's also with Gamuda, which is a construction company, and their supply chain, Nestle, likewise. So these are the companies that have gone through the adopter program, as you can see listed here. We've also had the support of the Chambers of Commerce. Through them, when they adopt it, their members also go through the workshop. And the adopters program, it's this and counting, which is very exciting because instead of having to find a strategy to reach thousands of SMEs, we reach them through the listed companies and their supply chains. So I'm happy to also share that Malaysia is chairing ASEAN this year, and SEDG now is going to be scaled up to an ASEAN SEDG tool. So it's something that across ASEAN, all the member states can use to help the SMEs with their ESG disclosures. That's it, both halves of my presentation. I hope you found the Malaysia experience useful. Thank you.
Thanks very much. Now I'd like to invite Nick Cameroon to give the final presentation on Inclusive Green Finance Implementation Roadmap.
Thank you, Peter, and Assalamualaikum and a very good morning. Thank you, Nadia, for taking us through. I think the first three presentations were focusing more from the capital market and also disclosure. So I'm going to, relax a bit. Maybe this is from the advocacy point of view as a framework. So let me take you through on the outline. First, I give you a thought on what is AFI, the Alliance for Financial Inclusions, and then delve into the down on the scaling on green financing, the framework, and the second part of it, I'm going to touch a bit on green credit guarantees for MSME from the perspective of AFI members. So what is AFI? AFI, the Alliance for Financial Inclusions. We are non-profit and non-political organizations. And then our members are all financial regulators coming from 83 countries. We have more than 90 over financial regulators. And then these are central bankers and also Ministry of Finance. And I think we have few members in this room from Bangladesh Bank, I think from BSP Philippines also. And basically what we do, we advocates member in the forms of coming out with advisable and then practical policy. And then we are not SSB, so we don't impose. So what we do just advise them on best practices, which relates to financial inclusion. And this is the impact that we do. I think this is the old slide, but it's okay. we can do with this. So we have moved to 1,130 policy changes since our establishment. And then this is the Maya Declaration. The Maya Declaration is basically the declaration that made by members in Mexico that pledge that they will, endure any form of policy that will improve on financial inclusions. And then this is one of the work streams that we do, which is the inclusive green finance. And then this work stream basically have a direct impact on the 4 SDGs. Okay, yesterday we heard that some of the presenters were talking from the bottom-up approach. So what we do is basically we focus on the 7 thematic, and then we try to put them together from our members across the world. And then we discuss about DFS, financial inclusion data, financial inclusion strategy, global standard proportionality, consumer empowerment, IGF or inclusive green finance, as well as the SME finance. Okay, so coming into the policy itself on scaling green finance for MSME. So yesterday, I think we spoke a lot on the importance of MSME, how MSME has become the bloodline of the country's economy. And I think one thing that I want to highlight also in terms of the credit gap. So as of, I think, 2018 or 2020, around 41% of former MSME in developing countries have unmet of a financing need of around 5 trillion. And if we include this credit gap from the informal sector, it can go up to 8.3 trillion. And then MSME also operate in sector which is energy intensive and also low value added. So it is needed for the government, the policymaker, to come up with a policy framework in climate change mitigations. So MSME can play a potentially significant role in strengthening the country's resilience to climate change. This includes making the transitions on the renewable energies, adopting green technologies, as well as contributing to the low carbon value chain. However, MSME also face difficulty in transitioning this low carbon economy. So these challenges is basically from the perspective of the overall on how the challenges of MSME to transition into a green technology or green industry in terms of the cost, lack of tax incentive or other incentive, funding constraint, which we are going to discuss in terms of the financing, limited risk sharing mechanism, and also knowledge of climate change. So this is also goes back to the awareness and inclusive green finance data for MSME. Okay, so we don't have the slide. Originally, I put the slide of 4 Ps. So when we discuss among our members, we came out with 4 quadrants of provision, promotion, protections, and preventions. So these 4 Ps explain in details on what are the adaptations and also mitigation measures that the financial regulators need to look into. So from the provision, it's basically supporting the mandated lending or targeted disbursement of fund for the mitigation and adaptations activity. So one of the examples that I can share with you here is basically from Vanuatu, where Vanuatu Disaster Reconstruction Credit Facility assists the MSME affected during the tropical cyclone Palm, and basically it gave the concessional lending to the commercial bank. Secondly, Fiji. Fiji formed a natural disaster rehabilitation facility. It's a climate resilience and adaptation program to replace the damaged inventory, cover the loss of sales, including working capital, and replace the damaged plants. In terms of promotions, it allows government to create an incentive to the private sector and financial services to qualify beneficiaries. Example like the Philippines, where the BSP, Banco Central Philippines, collect data and conduct research on the impact extreme natural disaster on banking operation. And the third quadrant is protection. So protection is basically reduces financial risk by socializing potential losses through the insurance or social payment. So under the quadrant of protection is where the green credit guarantee scheme comes into picture. And one of the example that I can also share here is when BSP the Central Bank of Nigeria guarantees up to 50% of the loss if the smallholder cannot repay on the loan through the NIRSAL program. And the last quadrant is on the prevention. It's basically measures to avoid undesirable outcome, such as the risk reductions measure and environment of the social risk management, or ESRM. So I think the previous speakers did mentions on how important to incorporate the elements of inclusive green finance in the respective businesses. Okay, Bangladesh Bank also issue ESRM guidelines to direct the financial institution to integrate ERM policy into the existing credit risk management procedure. This is basically protecting the financing from the risk of environmental degradations and sustainable banking practice. So you can see the market shaping policy and direct intervention. So basically the market shaping policy is basically the one that it will reflect on the market, and direct intervention is among what our members at AFI will be conducted. This measure also will impact the SDG. You can see the SDG will be impacted. And then, okay, just now, previously I mentioned about the overall challenges of the transitioning MSME into green, but here I'm going to focus on the green finance for MSME. So it basically comes into three classifications from the policy and strategy, access to finance, and risk management. So in terms of the policy and strategy, we know that, there being because this is a new turf, so it's in terms of data, it'll be very scarce, and data scarcity is one of the main hurdles, as well as the limited applicability of green taxonomy to MSME, and also lack of proportionate regulations. Secondly, on the access to finance, it's very limited in terms of incentive, be it from tax, and then in terms of the high cost of green certifications, and the interest or the cost of financing for green financing also slightly higher, and insufficient risk sharing mechanism. And from the risk management, this is where the disclosure and then the awareness and culture of greening need to be embedded among the MSME itself. Okay, this is basically the mitigations measures that the members have came out with, the framework for actions to address on the first challenge, which is on the policy and strategy. So gender disaggregate data. So for gender disaggregate data, because I think from yesterday, we didn't mention much on women MSME or on collecting data on gender. But I think here, because if we focus on micro enterprises, like more than 80% or more than 60% of the micro enterprises are women MSME. So I think it is very important that the data can be collected and then disaggregated based on gender. And secondly, is on the taxonomy. As we know, taxonomy will determine on the, the kind of activities that define on green and sustainability. The third one, NFIS, or National Financial Inclusion Strategy. Yesterday, I think our participant from Cambodia mentioned about incorporating MSME into NFIS, and here incorporating green and MSME into NFIS as part of the pillars. And the final one is on the proportional regulations. As we know, to develop regulation, basically to incentivize the green lending for MSME. The second challenge is basically to empower green MSME. So as you know, empowering can be done through incentive, through preferential interest rate to mitigate on the high cost of greening MSME. Second, facilitate access to finance by providing a complete policy package. So a complete policy package, basically it comes with accompanying services like capacity building, training. So it makes that, not only you give the money or give a proper loan, but also to handhold the MSME to make sure that, they conduct and then they follow the right through of the greening MSME. The third one, encourage the issuance of the bonds, green bonds, and fourth is green certification. So certification is basically one of the hurdles when I was with one of the agency in Malaysia, that because the reason why is it adds to the cost of operation for MSME. So I think this is where the government or policymaker need to play their role to make sure how to ease on the cost of certification for MSME. Okay, risk management and building resilience. The first part of it, I think our previous speaker have covered, which is the climate-related environment disclosure, the reporting standard. I think, frankly, for MSME, this is a long way to go for some of the country, especially coming from developing and emerging countries. So their MSME, it could be very small, and then that is basically the biggest composition. So I think echoes to what Nadia mentioned earlier, it has to be like integrated measures and also work between stakeholders and agency in the country itself. And secondly is on the awareness and then capacity building program on greening. So maybe in some countries, this topic has been a mainstreaming topic, but for some, it's still new and require a lot of awareness and then training to make sure that it can be mainstreaming. Okay, the second part of my presentation is about the MSME Green Credit Guarantee Scheme for MSME. Okay, a Green Credit Guarantee can address two unique characteristics of financing. First, supporting access to finance, and second, targeting green economy outcomes. However, this Green Credit Guarantee cannot overcome policy regulation that deter investment in green lending, also cannot overcome the weaknesses of technology providers or solve legal loopholes. This mechanism falls under protections policy that enables MSME to adapt to these risks and also substantial contributor to building the adaptive capacity to the preparing environment for increasing risk. So in the Green Credit Guarantee Scheme, it helps to mitigate risk averse to the uncertainty of MSME financing of green project by improving the bankability of transactions where collateral is poor, encouraging lenders to provide financing to target group by sharing credit risk, creating market learning opportunity for greening businesses, technologies, and improving the ability of lenders to price risk the MSME and green project. It also helps banks to initiate and grow their green lending businesses by revealing new clients. As I mentioned earlier, to enhance this impact of Green Credit Guarantee Scheme, the facilities that provide them will also need to include accompanying program, such as technical assistance to borrowers, lenders, and capacity building to the specified segment, and specialized rating or due diligence services. Okay, this is basically the result of a survey that we conducted within our fee members in 2021. On the left-hand side, you can see the bar chart that indicates what are the institutions that involved in the designing, implementing promotions of MSME through credit guarantee scheme. So you can see central banks, national government agencies, and then on the right-hand side, the type of guarantee scheme that applies to our member, for MSME, for agriculture, and then other targeted sector like women, entrepreneur, and startup. Okay, the MSME credit scheme model, I think yesterday we mentioned, some of the speakers mentioned about what do you call this, individual and portfolio based. So credit guarantee scheme can be a kickstart lending in early stage green market. And I think yesterday one of the speakers spoke about penguins by serving a bridge in the initial stage phase of uncertainty where FI may perceive target group as too risky. Research indicates that credit guarantee scheme are just one of the many instruments used to influence the lending policy. They are often deployed alongside with other instruments such as the directed lending program, normally being issued by the DFI, and extended the loan to local financial institution or onboarding on lending to eligible project or customer in a target segment. So basically, you can see like a three main model in the form of private, public, which is with specific legislations, private, and also hybrid. So hybrid, normally, it could be partial or full government ownerships. For the regulatory treatment, it is important to incentivize the uptake of credit guarantee scheme through the treatments of guarantee loan of bank balance sheet of the bank. Based on Basel II, a guaranteed transaction should require a lower capital charge, thus lowering the lender's funding costs and encouraging financial institutions to extend more credit to the segment covered by the guarantor. A necessary precondition for the provision of green credit guarantee scheme to support MSME lending in the existence of the sustainable green framework. So that's the need of having a framework, basically. And the third, basically, is accompanying capacity building to upskill the ability of the greening skills. And the fourth one is we also have to consider on the exit mechanism or exit strategy, where when the target markets are stable or static, as part of the exit strategy, credit guarantee scheme should be evaluated to determine if they need to be terminated or redeployed. And these are some of the case studies from our members from Morocco, Solomon Island, Ghana, Seychelles, and Jordan. So basically, they apply the same kind of like measures in the form of a normal guarantee, but extended to a sustainable or green activity, and then the coverage can go up to 90%, depending on the sector and the provider. Okay, so the key takeaway for today, I think, as we know, MSME play a very significant role in strengthening the country resilience for climate change. We know that they are the main contributor and they are most impacted in terms of the climate change. And public finance, credit guarantee, and financial innovation are the effective tool in facilitating the MSME access to green finance for the transitions. And risk management and building resilience are also important to ensure the sustainability and also stability of the institutional competency. With that, thank you so much.
Okay, thanks very much. I think we can agree we've had 4 excellent presentations this morning. Now we're moving to the Q&A. So we can have the chairs up in front. So I'd like to invite our 2 live speakers to come to the podium. Before I start, actually, I had one question for Dennis. I wonder if you could explain a little bit more about the relationship. There seem to be sort of 3 dimensions in your scheme. There's the disclosure reporting, And then there's the point system that you calculate, and then there's also the actual performance in terms of pollution reduction. And I'm just wondering, if particularly when the banks are getting, let's say, lower credit cost, how does that actually? What's actually driving that? Is it primarily the disclosure score, or what?
The advantage of more standardized disclosure and thorough disclosure is that each situation can be tailored to what the client wants, what the bank would like. It is perhaps simplistic to say that a disclosure score from CDP should have a 100% financial impact. Let me describe what our disclosure score actually indicates, because Japan and Korea, being such mainstream users of CDP, very much understand this. There's a DCBA scoring, but because we're an environmental disclosure NGO, then this only measures the thoroughness of disclosure. D just means that you started disclosing. C means that you, through your disclosure, are demonstrating an awareness of climate risk. B shows that you are managing that climate risk, and A is market leading in disclosure practices. Only 3% of companies in the world get an A from CDP. It's quite hard to do, but it is not a green performance rating. It is about how thorough and ambitious your disclosure is. You could be a polluting oil company, you could get an A. You could be a bank that invests and funds in polluting industries, and you could get an A because you are being transparent. But the link between disclosure and actual environmental action is this: you can't manage what you don't measure. If you disclose and are transparent about it, that gives you insight. And as one of my slides showed, when you have a baseline and you've measured something, you are inspired to do better. You will set targets to do better. And what we've seen, academic studies have shown that within 2 years of starting to disclose to CDP, then companies start reporting 7 to 10% reductions in their scope 1 and 2 emissions. On a regular basis, companies that disclose will actually start disclosing a 2% per year reduction in scope 3. And that's actually enough for us to hit net zero 2050. So to answer your specific question, Peter, then disclosure does drive environmental performance, but it doesn't necessarily have to be the thing that is the one and only KPI in one of the any sustainable finance deal. Because if you're drawing out more information, then you can tailor the sustainable finance product that you want to the needs of the buyers and the needs of the banks and the needs of the SMEs themselves. Other examples that I had on my slide there were actually based upon water performance, based upon the withdrawal of water and or reductions in carbon intensity, the kind of thing that you could get with more data rather than just boiling it down to a disclosure score. Does that help, Peter?
Yes, that's excellent. Thanks very much. Okay, so let me open the floor to...
I don't know if Professor Shirai had a question for me on the back of that question.
Yes, go ahead. Go ahead if you'd like. You're muted, I think. Shirai-san, we can't hear you.
Yes.
Okay.
I just want to add information to what Dennis said. So right now, based on CDP GHG emission data, so there is I think, public utility net zero initiative. So you can go to the website, and I think around 1,000 large companies you can get their scope 1, scope 2 at least, and some scope 3 data on the website. Everybody can access to these largest companies' data globally. So the data is coming from CDP. So that's very important, I think, for us to get scope 1, scope 2, and then in the future, scope 3, and then maybe emission data. And then each sector, it's a sector based. So for example, bank can look at each sector. And as Dennis said, oil company may be included. That's fine. Then, but at least we can get data and the sectoral challenges related to decarbonization. So financial sector can develop engagements plan and based on that data, sectoral base. And then in the capital market, the asset management company can create index, like green index. It's more precise because they can get this common GHG data. And so stock market can develop financial assets such as index, and also banking sector can have a sectoral analysis, and then they can change the lending term. So having this basic data through CDP is really important. I just wanted to add.
Thanks very much. Okay, so the floor is open to questions. Please identify yourself and also who you're directing the question to. So, Professor Yoshino.
Thank you very much for all the presentations. I gave my presentation yesterday, and this scope 1, scope 2, scope 3 is benefits Europe. It does not benefit Asian countries because internal trade is increasing in Europe in order to avoid some of those scope 3 to be put it in. So I think we learned 20, 30 years ago when VAT, value-added tax, was introduced. In each stage, tax is charged. Then we don't have to worry about scope 2 or scope 3. In each stage, companies focusing on their output and also their CO2 emissions. Then it is better to measure to each stages rather than thinking about what kind of inputs we are putting in and what kind of value chain we are supplying our products. So I think it is better for Asia to voice different way rather than just following European proposals. And that will only benefit Europe. And we should look at the value-added tax. It should be measured in each stages rather than thinking about what kind of input we are doing and also what would be the value chain. So that is one. Second one is there are many, many equipments, as I explained, Taiwan, Japan, and probably in Korea, how to measure CO2 emissions. Schools in Japan, they have temperature, moisture, and amount of CO2 is measured by very simple tools. And if those tools have been put it in small businesses, large businesses, and so on, then we can measure the amount of CO2 emissions. And there's also the internet wire, which can be sent those data, for example, to electric power company. Then they can look at the amount of entire electric power usage, at the same time, average exposure of CO2 emissions of each company. That may clear lots of problems, it seems to be discussed today. So those are my comments. And any of you, I'd like to know your reactions. Thank you.
Yes. Anybody like to respond to this? Yes, Ashirai-san?
Yeah. So thank you so much, Professor Yoshino. You know, I understand your comments, and basically I agree with you. But you know, if each company, regardless of small or large, if everybody disclose scope 1, scope 2, we don't need scope 3, right? I'm sure Dennis agree. But at this moment, it's not easy. And also thinking about Japan introducing value-added tax to small medium enterprises is politically impossible. So the idea of this disclosing scope 1, scope 2, scope 3 is happening from the perspective of investors. So that was the starting point of G20 and TCFD. So idea is investors, some environmentally conscious investors, they want to contribute to the climate mitigation, but they don't know how to make assessments. So that's why TCFD was created for the purpose of investors. And then usually investors, global investors pay attention to large companies, especially listed companies. And so then from large companies, they need to get the SMD data. So through their data disclosure issues happening. But once we introduce the tax things, it's very ideal, I fully agree, but probably very difficult to implement many countries. Recently, I had a talk with Japanese company listed on prime market. So this company is subject to ISSB. Actually, this company is using CDP's, this what Dennis said, supply chain data system. So actually, this Japanese company, listed company, is very thankful to CDP approach because they can ask their small medium enterprises to disclose some basic data, which is very helpful. So at this stage, what you said is really ideal, but taxing is nobody want to listen about taxing. So I think at this moment, from perspective of investors and through supply, large big companies to small SME is kind of the process we like to make progress. Dennis, go ahead.
Peter.
Yes.
Sorry, I've been searching desperately for my digital hand to raise. I couldn't find it, so I raised my hand instead.
I can see your actual hand.
Thank you so much, both professors, for your comments there. If I want to just comment on both the points the professor in the room said. My first comment is I can't actually comment on which country is going to solve what taxes need to be put on. CDP is apolitical, not a political organization. We are a data gatherer and surfacer, but we're trying to put the data at the hands of the folks in the room here, academia, government, companies, finance as well, so you can make better decisions. You can't make the policy decisions that you have to without the right data. The point that Shirai professor pointed out, it blew my mind when I learned it, because I actually came from 23 years of finance. Everything I've learned about the environmental transparency has been in the past 2 years. When I first understood that everybody's scope 3 is somebody else's scope 1 and 2, that blew my mind. She's absolutely correct. If everybody accurately measured their scope 1 and 2 and everybody shared that, we would know everybody's scope 3, you wouldn't need it, and we would be equipped to make the right kind of policy decisions. But what I wanted to add was that by the time you start disclosing more than just the minimum, then we give everybody an option of disclosing more and interesting things. This actually addresses the second part of your question, the fantastic initiatives that are being taken in factories, in SMEs, measuring carbon with sensors and things. In last year, CDP disclosure that was gathered, 42,000 emission reduction initiatives were reported through CDP, including over 6,500 targeting scope 3. And that's the kind of data that you would get if you asked everybody, please disclose more than just the minimum.
Okay, thanks very much. Any other questions? Any questions from our other panelists?
Somebody.
Yes.
Thank you. My name is Fahrudin from Indonesian Ministry of State-Owned Enterprise. We are all focused on disclosure related to the sustainability green transition. But in my opinion, disclosure is not more important than operational practices. Many organizations prioritize ESG or green disclosure, but without strong operational implementation. So disclosure risks becoming more greenwashing. So that we are developing a framework for ESG implementation as a foundation for ESG practice in state-owned enterprise. But we know the framework is a few reference in the word, yeah. But the disclosure is many reference to that. So, what is your perspective on this? Maybe Miss Nadia and Prof. Sayuri can answer it. Thank you very much.
So I think that's a real concern, Bapa. So, and that is why I think in Malaysia's case is our thinking about moving ahead for reasonable assurance of these disclosures as one element. But I'd like to come at it from another angle as well. And this is where I think it's true for any form of disclosures, even for example, governance, right, which has had a longer run. The worry is it looks nice on paper in terms of policy, but when you actually look at the practice, it may be far from it. So I think the role of shareholders here is also going to be very critical, like shareholder understanding of what they are reading and what their companies are disclosing and holding the boards or companies accountable for them, including their emissions reduction measures, their transition plans. So that keeps things in check as well. But of course, to do that, they will have to have the right sets of information before them. So I think number one is the approach on assurance. And number two is also then, leveraging on shareholders to keep that conversation going with the companies to hold them accountable for what they're disclosing.
Any other responses on that?
Can I speak?
Yeah, go ahead. Should I sign first? Sorry. My microphone's just going out.
This one is.
Yeah, should I sign? Please go ahead.
So at the beginning of my presentation, I mentioned we cannot, cope with climate mitigation just by looking at disclosure, right? The most important policy is government carbon pricing and fiscal policy, tax subsidy, public investment. So they need to encourage the industry to decarbonize their production. Without that, just focusing on disclosure is not doesn't work. So it has to go with government. And but at the same time, I also want to say, looking at in the case of Japan, we also need to educate the public. Because, after all, who buy goods and services, low carbon goods and services? It's general consumers. So at this moment, consumers do not really understand the importance of this carbon footprint. And also information about carbon footprint is not available. So I think educating public and supporting low carbon goods and services, without that, corporate sector do not find very importance to disclose. So this has to go together. But so today we just talked about finance side, but I just want to emphasize it also has to come from government and education and support from general public.
And Dennis, did you also have a comment?
I did. I want to address the point about greenwashing and disclosure as a tool for greenwashing, and I feel that the way to combat greenwashing is actually to have standardized disclosure. The greenwashing is really being subject to so many frameworks that you end up picking the one where you look good. and then also being free to publish beautiful looking reports full of shiny looking photographs and say, I did this, look how wonderful I am. Whereas standardized reporting, you've heard many examples today, the CSRD, the SEDG in Malaysia, where everybody has to answer the same questions. And you are not said, oh, please give me another picture. Please give me another story about how wonderful you are. Just answer the same questions so that everybody is comparable. That would be my suggestion as to how greenwashing is combated. And to use a very simple analogy about why disclosure is important, though we've heard this from a CFO of a major Fortune 500 company, and we fully agree that if disclosure becomes too difficult, every dollar that is spent on disclosure is a dollar taken away from taking action, which is what we want. We want action, actual decarbonization. So disclosure must be simpler. But without disclosure, there is no accountability. It's kind of still a beginning of 2025 here. It's even the beginning of the year of the snake. It's a new year. If you make a New Year's resolution, but you keep it to yourself, you are going to fail more likely than if you make a New Year's resolution and share it with your family and share it with your friends. Because when you have disclosed to your family and your friends and your peers, here is my target, I'm going to do better, then you are more likely to succeed than by yourself taking action, but not sharing it with everybody, because there's no one really else to hold you accountable. That's what disclosure is for, accountability.
Okay, thanks very much. I think we're out of time. Sorry, Boyoung? Okay, one more question over there.
Thank you. The first presentation was really wonderful, and I've learned a lot. So I know the time is not enough, so I have a quick question to Dennis. So in this room, we have many government officials from the region who are working on the SMEs. So I want to know how the government and CDP work together. If you have any successful stories to collaborate with the governments to enhance the SME disclosures, please share with us. Thank you.
Governments is not my area. I'm head of capital markets, so my usual counterparty is financial institutions. But I do know of regulators and central banks who are, very, very associated with governments. They're up there as authorities. The Bank of France is a CDP signatory. A signatory is asking the world for disclosure. That's where the power of authority of asking for disclosure comes from. It's not an NGO, a not-for-profit asking you to do something that is quite hard. No one's going to listen to us. But 700 financial institutions and stakeholders asking the world for disclosure, the Banque de France is one of them. The Norwegian central bank is another one of them. The Brazilian Securities and Exchange Commission is one that is using CDP data to monitor the implementation of ISSB across the Brazilian economy. The Brazilian Stock Exchange is another party that gets its data from CDP to see how well their companies are progressing. The Hong Kong Monetary Authority has an MOU with CDP, implementing specifically CDP questions to SMEs in Hong Kong. I hope that those are enough taster examples for you, that anybody in the room is very welcome to get in touch, and we can tell you more.
Okay, thanks very much. Is there one more question? Yeah.
Thank you. Thank you so much. I'm from Cambodia. Yeah, my question is similar like the question in previously. I just want to see that the interaction between the green SME green financing and, for example, like ESG report. From Cambodia we can say that the beginning stage of a Cambodian, and I know that Malaysia gonna be the lead. We can say that the lead country among ASEAN that established the national framework of ESG, right? So I just from my understanding, so I want to see the interaction between the because Cambodia is not just only one ministry or one institution that in charge of that. So maybe we have a line ministry. So I want to see the how the best practice from Malaysia that developing the ESG development framework, national development framework, and the interaction between the green industry, finance, and ESG. How can the government support, or how can the government provide incentive to the those who are those enterprise who are adopting the ESG report? Thank you.
Thank you so much. I think from some of the questions may be related to Malaysia, but I think to address on your first questions, when we are dealing with many ministry and agency, obviously it has to come into a committee. So that committee can be like a part of the National SME Finance or National SME Development Policy Committee, or you have a dedicated committee on greening among the agencies and ministries that hold on SME also, because we understand that SME doesn't sit only in one ministry or agency, but also it touches to other ministry. And then I think for question 2, I'd leave it to.
Yeah, so I think just like you saw for the NSRF, it was intentional also that the committee members are the policy makers. And there's a question in terms of why stakeholder B, C, or D are not in the committee as well, because we also do not want it to be too unwieldy. And also you've got the policy makers in the committee, but this is where then you need to leverage your sort of more targeted stakeholder engagements and public consultation to ensure that you have a proper canvassing of all the views before you develop the framework. But I think an interagency, interministerial committee helps, which is what we also have in Malaysia to look at sort of green finance, ESG related matters.
Okay, well, I think we're out of time, but we've had 4 very good presentations and excellent discussions. So please show your appreciation to the presenters.
Thank you to our moderator and panelists for the productive discussion. Ladies and gentlemen, welcome back. I hope you enjoyed the coffee break. We will now begin session 5 under the theme of the role of green credit guarantees in facilitating the green economy, including transition finance. To lead this session, I would like to invite our moderator, Mr. Tae-hyun Lee, Director of Korea Credit Guarantee Fund, to the stage. Please give him a big round of applause.
Everybody seated? Yeah, I'll start my session 5. So good morning, everyone. Welcome to session 5, part 1. The role of green credit guarantee in facilitating the green economy, including transition finance. My name is Tae-hyun Lee, Director at Korea Credit Guarantee Fund, and I'm honored to serve as the moderator for this session, as well as the several others which will be conducted today. Before we begin, I would like to briefly share how I see my role today. Rather than speaking too much myself, my focus will be to manage time and ensure smooth transitions, and most importantly, allow ample time to hear from our expert speakers. So you may have noticed that session 5 is divided into 2 parts. Also, both parts focus on green finance. The 2 sessions approach the topic from slightly different perspectives. Part 1, this session, will focus on the overall role of green credit guarantees in facilitating the green economy and how they can be combined with transition finance to support SMEs in their green transformation. Part 2 this afternoon will focus more on the technical and regulatory aspects, such as green taxonomy, frameworks and measurement, reporting and verification, which is called MRV systems, which are critical for ensuring transparency and credibility in green finance, and especially when we avoid greenwashing. Together, these 2 sessions aim to provide a comprehensive understanding from policy-level strategies to political implementation tools. As I promised, I'm going to stop here, and I'm going to stop speaking here and introduce our speakers. So our first speaker is Dr. Jungu Lee, Director of the Finance Sector Office at ADBI. As you all know, Dr. Lee did an excellent job moderating yesterday's session, leading the discussion with deep insights and smooth facilitation. Last year, I had the opportunity to hear from Dr. Lee's presentation on transition finance at a previous ADB event, and I found it extremely insightful and forward-looking. I am confident today's presentation will be equally valuable. Dr. Lee, the floor is yours.
Thank you so very much. This is Jungu Lee, and introduced by KODIT, and thank you very much, Mr. Lee. Today, I'm given 20 minutes, right?
Yes.
20 minutes, okay. So now it's 39, so I believe, yeah, almost 40, so I will finish this until 12 noon. And here, oh, okay. So let's say, share with you why is it important. And here, the topic is transition finance and the role of green credit guarantee in the facilitating the green economy. So the key concept I'm going to share with you is, yes, we want to support facilitating the green economy, but before we go there, we need to take care of something, which is a gray area. That is we call transition finance. So transition finance, we have a it's not really 100% unified, but we have some sort of understanding, generally agree, about the definition of the transition finance. So we can call it financial services and product to support the transitioning of fossil fuel economy towards what? Decarbonized economy, or low carbon economy, or zero carbon economy. So the key part is here, there's something existing economy. What is our existing economy? Fossil fuel based economy. So when you come here, and when you take the airplane, when you take the bus, and when you purchase the cell phone here, and most of the parts, they consume fossil fuels, right? So these fossil fuels, and I say, the goal is what? Decarbonize the economy. That's a green economy, already pure economy. So move from A to Z, there should be B, C, D, and F before we go Z. So that B, C, D, and F, we call it transition finance area. It's a transitioning of the economy toward the decarbonized economy. So how are you going to make it? The role of finance here. So providing financial services and the product to support the transition, we call transition finance. So, today what I'm going to do is talk about the transition finance. Why is it important? And then what kind of, green finance, we call it financial risk management product, including the credit guarantee scheme. We call it green credit guarantee scheme. But I'll go a little bit further than this green credit scheme to talk about so-called innovative financial risk management product, including some concept of insurance. And then I will share ADB's project and the programs. So the first one, like I said, why is it important? We have a very important umbrella, Paris Agreement. The Paris Agreement, when you go to 2.1c, you can type in right now in the Google, 2.1c of the Paris Agreement, it says, finance flows with a pathway towards low GHG emission. So it focuses on what? Two things. First, pathway. So it is a pathway. It's not steady concept. It is dynamic, stepping over many stages towards this decarbonized economy. Second one, final goal is what? The final goal is to achieve very low decarbonized economy or zero, emission economy. But it takes time. It takes a lot of effort. And, UNDP said it's make up just only less than 8% of the global GDP is what? Only pure green activities. So that means 92% or more is what? Fossil fuel or gray area. So now we can figure out, where do we put an effort? To make this low carbon economy, we have to put a lot of effort to transition this fossil fuel economy. But there are areas of what? Emitting a lot of emissions. That areas, we call it hard-to-abate sector, or sometimes we call it high-emission sector, depending on the country context. Yeah, this is a different definition of a little bit, but it's, basically it emits a lot of high-emission, hard-to-abate sectors and high-emission sectors. So those areas is a fossil fuels. It's really, we need to put a lot of effort to transition. So we are looking at our current status is high dependency on fossil fuels. And then there is a strong need from where? Hard-to-abate sectors, high-emission sectors. So we need some sort of effort. There's some sort of effort. I want to say there are key barriers to transition finance. Why? Like I said, we have some sort of understanding. January agreed on the definition of the transition finance, like I said. But what are transition activities? Depending on your country context, it is different. Okay? Some country may call, for example, electricity sector, this is a hard-to-abate sector. Some country have a lot of low alternative technology, low-cost alternative technology. If the country has a lot of solar, wind, already put in place, like some of European countries, electricity is no longer, hard-to-abate sector. Right? So it's depending on the country context, the way how we understand is different. So that's why I say here is understanding about transition definition is there, but transition activities are different. So lack of clear definition of transition activities depending on the countries are different. And then lack of disclosure framework. This is very fundamental issue, right? Because of the reliability of the data issue. And then the third one is what kind of right financial instruments provide incentives to make the hard-to-abate sector, high-emission sector towards a decarbonized economy or low-carbon economy. And also, how many successful demonstration projects we have. Not many around the world. We are doing a lot of carbon footprint-based project, fossil fuel-based project, a lot, every day. But this, the transition project, not many, especially for the successful, still ongoing. And then when you look at the landscape of transition finance in the fixed income market, this is ICMA data. ICMA says, 90% of the green bond issuance, actually, it is related to transition. But it says green bond instead of saying transition bond. Another interesting thing is, like I said from the beginning, there are high-emitting sectors we call hard-to-abate sector. It's difficult to transition. Coal, difficult to transition. Cement, aluminum, difficult to transition to low carbon. But these are actually the areas needs to get a lot of financing, but actually sustainability bond issuance is only 2% by this hard-to-abate sector, isn't it? This is the most needed area, but just only 2%. That's really a dilemma. Why does it happen, right? And also, sustainable bond market, yeah, we should say this is transition label, right? Definitely. But no, it is sustainable bond market. Only 2%, 0.4%, less than the 0.4% is climate transition label. It has many factors. Like I said, each country has a different understanding, different economic status, development status. So if they argue this is transition, other country might say, oh no, that's not the transition. How we can, make this mutually understanding? And then agree on the financing and product and services, and then enabling framework, it's not easy. That's one of the reasons. So here, ADB support for transition finance, and we have our specific modalities and policy-based loan and financial intermediate loans and sector development programs and research-based loans. And we have a couple modalities. Using those modalities, for example, first one, promoting industrial park green and low carbon development projects in China. We provided financial intermediate loans, $200 million financial intermediate loans through financial institutions, support low carbon transition projects in industrial parks in China. Why? Because in China, more than 25% of greenhouse gas emission come from these industrial parks. So we put the money, ADB put the money, we put our skin in the game using this modality, financial intermediate loans, to decarbonize that industrial parks. So some of your country already have industrial parks. I think it's a very good idea to look at how we can transition that industrial parks to low carbon economies. Maybe Bangladesh has very big, the garment industry, industrial parks. So all of those are very interesting things. And then Mongolia Bank Green Bond Investment Project. This is first publicly listed bonds, green bonds. ADB subscribed to means invested 12.5 million in Mongolia's first publicly listed green bonds and supporting SMEs and women-led enterprises to its private sector operations. So we purchased their green bonds, 12.5 million. And then ADB purchasing means liquidity. And then that is to help the capital market when capital market is very weak and small. And then not only ADB, we work together with the EBRD. It's very equivalent amount. When ADB and EBRD comes in, private sector looking at the opportunity because we are the first mover and they're coming in. So these really inducing, promoting the more liquidity and to the capital market. And then we also provided a loan to Indonesia to set up green finance facility. And these are some of the examples what ADB is doing during the recent years. And then I'm going to talk about our regional initiative on transition finance. Why this regional cooperation is very important. Like I said, we have a different understanding about the transition activities. We have a different framework. We have a different level of the preparedness for the transition framework and the product and the instrument. So if you're so different, how can you work together? We need some sort of harmonization and standardization effort, right? So that's why the regional cooperation is very important. So currently, for example, the next week, we're going to have this climate risk monitoring dialogue and with ADBI, and I think it's at ADBI, Dean Sonove played a key role in making this happen. So we're going to have this monitoring dialogue next week in Tokyo with our countries, developing member countries. And also currently ADB collaborate with Japan Financial Services Agency and also ASEAN capital market regulators and also Glasgow Financial Alliance for Net Zero, GFANS APAC, Asia Pacific Network, and so-called Asia Green Transformation Consortium Initiative. This is really to identify the barriers in promoting the transition finance, and then also promote the flows in the transition finance, and then share the use cases of the projects so that the understanding is enhanced. Once we have more understanding, and then we will move towards a harmonization. Yeah, maybe difficult 100% harmonized because of the depending on the country context, but at least we need some efforts. Why? Because value chains are there, right? Korea invested in Indonesia, Korea invested in Thailand, Korea invested in Vietnam, Bangladesh, all value chains are there. So we need to work out together. Otherwise, what kind of rules we will apply? in terms of disclosure, in terms of this policy framework, in terms of supporting. So that's exactly there the need. Why this transition finance effort, individual effort, and the regional effort is very important. And one of the projects in the right side is, because we say we are committed to making that the harmonization, so we published ASEAN Transition Finance Guidance, version 1 and 2. I really sincerely ask you to type in the Google and ASEAN Transition Finance Guidance, version 1 and version 2. 2023, version 1, 2024, a couple months ago, version 2. This really helps developing member countries understand and clarify. It does not provide a definition of the transition finance. Why? Like I said, there's a sensitivity, but at least we provide a clarification on what are the transition activities. It is entity-based, it is asset-based, it is institution-based. You can take a look at it, it is very useful. ASEAN is moving that way. Some of our colleagues from ASEAN and already benefited and from this ASEAN Transition Finance Guidance. And also ADB has been driving this energy transition mechanism, and also ADB's Innovative Finance Facility for Climate in Asia and the Pacific, which is so-called IFCAP, is also all support the transition towards the low carbon economy. And then I just want to say, okay, if transition finance is so important, what do we need? Over the project, idea, concept, and then end of the project, we call it project cycle. All of the project cycle, we need some sort of mechanism to de-risk. Because what we want to do is, because this is a new area, right? We're not familiar with this kind of transition area. So what do we need? We need 3 things. First one is how to get policy framework right. So that means it's a government side, right? Enabling, environment side. Second one is how to get institution capacity right. So once we have enabling framework, each institution, whether it's a sovereign or non-sovereign, they should have the capacity. And then the last very important one is how to get climate risk pricing right. Because we are not this is the sort of we have to confess. How to get the climate risk pricing right is humongous challenge. So that's why we also work together with the insurance companies who are very good at multi-dynamic risk calculation and from their work. So here, why the blended finance structures is very important to mitigate investment risk. And then once we mitigate the investment risk, it is going to help positive impact for the net zero investment. So this is related to green credit guarantee, and my next presenter will actually drive all of you deep dive into green credit guarantee. Here, mechanism to structure catalytic fund and guarantees and insurance together with the grants and technical assistance. Why? Like I said, it's over the project cycle. It's not just implementation. From the beginning of the preparation, and we need mechanism to de-risk. So technical assistance and grants definitely played a key role. And then the green credit guarantee schemes, I believe in, our KODIT colleagues will have a more and a deeper understanding. But here, the challenge for this green SME projects, why it carries risk? Because there are 3 things. One is asymmetric and imperfect information. The other is a high perceived risk. Why it is high perceived risk? Why? Like I said, it's from the beginning, I made an example of the hard-to-abate sector. It requires what? New technology to mitigate greenhouse gas emission. To green the economy, it takes money and it takes new technology. But I said it's a new technology. That means we never tasted before. So how could we prove this is going to produce that committed outcome? So that is a risk. And also, I raised yesterday, finance doesn't know technology. Technology doesn't know finance. We have a fantastic technology developed, but how can ensure this fantastic technology can play a positive role in economy by the help of finance? So we need to engage finance. So that size is a sort of the perceived risk because we don't have any 3-year or 5-year sustainable profit record, right? And those, economic externalities issue, and I think it's you guys already know, but I'd like to discuss this externality issue, which is very fundamental, and over the lunchtime with you guys. So important thing is that financial risk management instrument. So this one of the financial risk management instrument, I just want to share two things. Like I promised, one is credit guarantee. Definitely, credit guarantee, it will play a bridge, initial phase of uncertainty, of MSME financing, of green project. We learned yesterday a lot about this role, right? Especially for green, it is going to improve the bankability. It is really going to increase the bankability. And then, oh, sorry, what's going on? Okay, and then also it helps to create the market, and also banks to initiate and go their green lending. And like I said, it's credit guarantee, and we learn a lot, and also the next, the speaker will talk about more. And how about the insurance, role of insurance? I'm just telling you, I believe that KODIT also does this work, okay? And I learned it, and I didn't know that, but I learned it, and KODIT does. So innovative financial risk management tools, we call it de-risking energy efficiency investment. There are two things. One is energy savings insurance. Second one is energy efficiency insurance. Energy savings insurance, it covers the commitment made by the technology supplier. So how many technology suppliers, once you purchase this IED light, we have so many SMEs that actually they do. How can we help them support this transition from, high consumption energy to very low consumption energy? We need support, that kind of support. So the commitment, it's a kind of guarantee for the delivery of the commitment. That's sort of the performance contract, right? So this energy savings insurance, it is for the commitment. It is to guarantee the delivery of the commitment by the technology provider. And the right side of the energy efficiency insurance, it is more broad. So it is energy efficiency project, and the service company is ISCO. You heard about this ISCO, role of ISCO is very important, especially transitioning this all energy system in the very large metropolitan area, maybe Philippine, Manila capital region areas, Tokyo metropolitan area, Seoul metropolitan area. These all, the lights change to LED light is very important. So it's very broad, this ISCO. So these two things are really insurance, innovative insurance to de-risk. And there are 3 ADB guaranteed projects. One is, I think one of our Sri Lanka colleagues, and know already this one. This is financial intermediate loan project. And then 50 million ADB money of new SME line of credit. Another is 50 million loan to the government for an equity infusion into the National Credit Guarantee Institution Limited. So this national credit, the NCGI will play the role, will provide the partial credit guarantee. And this is actually, we put in place interesting element led by women and also climate action. And the second one is Philippine ACN. ACN is Philippines Ayala Group company. This company is trying to set up the facility. This facility is composed of two things: 5.5 billion direct loan from ADB, the other 5.5 billion direct loan from a local domestic private bank. But out of these 5.5 billion, 20% of which will be guaranteed by ADB's partial credit guarantee. So this BPI, it builds on ADB's AA credit rating, 20%. And they can leverage more at a lower margin. This is really cost-effective price to the borrower. So like I said, it's a third item is getting the climate risk price right, right? And then the next one is this Uzbekistan, the wind power project. This is also ADB provide a significant demonstration effect by a partial credit guarantee. And key takeaways. Okay, so I began today's presentation. Importance of the transition finance. Why? Because we are standing on fossil fuel industry. We want to decarbonize. There is a pathway. So Paris Agreement already said pathway, right? So it's not just one over the day or over the week. It's acknowledge the time and effort. And the second, what is our situation in the capital market? And according to the ICMA data. And then what are the challenges and issues, the barriers? And then what is the new product? New product, innovative product, credit guarantee. And the other side of the tools is a innovative financial risk management product. Like I said, energy efficiency savings insurance, energy savings insurance, energy efficiency insurance. And then ADB project, and then ADB's regional cooperation efforts. So I really want to say, these de-risking instruments is very important. Guarantees and insurance are fundamental. It has really helped remove market barriers and exhibit successful cases. But they're not all. It really have some limitations because of the market failure still there. We cannot handle 100%. And all other issues are there. So it helped, but we need some sort of holistic approach and the tools together, including the capacity, grant, and TAs, and all others. And also legal and the regulatory framework. And the last one is, sharing the best practices is very important because of the country context is not exactly the same as others. So continue to share the best practice about the projects and also the examples. And it is going to resolve. And these, the pathway concerns, the barriers and the challenges. So I believe the Korea's example, building on this KODIT, and I think it is going to provide a very valuable starting point in mobilizing green SME finance in Asia and the Pacific. And I welcome all of the questions and after the presentation later. Thank you very much.
Okay. Thank you very much, Dr. Lee, for your clear and insightful presentation. I think the organizers want the discussion to be held after the stage is set up, so you could take a rest at your seat for a while. So our second speaker is Mr. Junmo Kim, Senior Deputy Director at KODIT. Mr. Kim has over 15 years of experience in SME credit evaluation, project finance, and international cooperation. He has conducted hundreds of credit assessments and worked extensively on risk management for large-scale infrastructure projects. The stage is yours, Mr. Kim.
All right. Good morning, everyone. I'm Jun, and I'm working at KODIT. It's a privilege to speak today on KODIT's role in advancing green credit guarantee schemes for SMEs in Korea. And I'm especially honored to share this stage with Dr. Lee Jun-yu. His contributions to policy financing across Asia and Pacific region have been truly remarkable. And as you know, this is the final session before the lunch break. I'll try to be exceptionally expeditious because I'm a speaker. At the same time, I'm a staff for the organizing committee, so I know we are really short on time. So without further ado, let's buckle up and hit the road. Okay, moving to the first slide. Sorry, where's the pointer? Oh, okay. So the presentation consists of 4 chapters, and here's the first one, and it covers KODIT's Green Finance Master Plan, which was published last year, May. So why did KODIT have to establish the Green Finance Master Plan last year? I know it's not the most exciting topic to cover, but here's the rationale. From a macroeconomic perspective, green trade barriers are rapidly becoming a reality, and it poses significant risks to SMEs. And at the national level, Korea aims for carbon neutrality by 2050 and raised its NDC target to 40%. And institutionally, KODIT has more than 15 years of experience in green finance. And with this, based on this foundation, we realized that it is really necessary to lead green finance for SMEs, as well as ensuring our strategies is translated into practical initiatives. And moving on to the next slide. This is a new vision framework for the Green Finance Master Plan. And don't worry, I will not cover every single detail of this framework because it's going to take another 2 days. So I'll just cover these 4 important pillars. The first one is pioneering new business frontier, which is, hold on, sorry, the pointer isn't working. Right at the box of the middle of the slide. The pioneering new business frontier includes the developing a carbon neutral data center with state-owned electricity and gas suppliers in an effort to accurately measure SMEs' energy consumption and emissions. So like KODIT will leverage its SME data expertise and analyze expertise level energy usage to support green finance decisions. And the second pillar is fostering a green growth ecosystem, and it focuses on the acceleration of the green startups by providing the targeted financial support to early stage businesses that have innovative green technologies. And when it comes to the third pillar, expanding the scale-up growth ladder, it introduces a specialized guarantee product for enterprises under the emissions trading scheme. And moving to the last pillar, which is establishing green finance infrastructure, it provides special guarantees to businesses engaged in green economic activities under this precise K taxonomy guidelines. So there are three key units, sorry, not the key units. So these are the key initiative memberships that we have signed for like past few years. The first one is PCAF, which stands for the Partnership for Carbon Accounting Financials. So as part of our commitment to addressing scope 3 of the financed emissions, KODIT discloses its financed emissions and takes strategic steps toward achieving carbon reduction targets. So upon joining PCAF, KODIT is required to carry out the research and disclose its carbon emission calculation methodology within 3 years. So to my understanding, this research is now in its final stages and in collaboration with the external expert organizations. So probably like in a few months, you'll be able to find these details on our website. And another initiative that we have signed is Korean RE100, which stands for Korean Renewable Energy 100. So unlike the global RE100, which mandates about 100% renewable electricity by 2050, this KRE100 initiative allows the businesses to set their own interim targets and roadmaps. So KODIT takes advantage of this flexibility by meeting its renewable energy goals through annual green premium purchases. So just to make a long story short, we pay more for these electricity bills. Moving on to the next slide. So there are three key units that carry out these green initiatives in KODIT. The first one is Innovative Growth Financing Center, which is under the umbrella of the Credit Guarantee Department. So this unit designs and manages the guarantee programs aligned with green financing policies. The second one is ESG Promotion Center under the umbrella of the Future Strategy Office. And this unit develops ESG strategies and leads to the carbon neutrality efforts. And most importantly, we have 110 branch offices nationwide, as you know. We carry out our own credit evaluation analysis. So like these 110 branches, they provide credit guarantees all over the nation and promote the balanced development of the green initiatives. Moving towards the second chapter, this is about the green guarantee products of KODIT. So as shown on the slide, KODIT's green finance strategy consists of two phases. So when it comes to the phase one, it began in 2008 with the launch of the credit guarantee support for the green energy sectors. This aligned with the government's goal of expanding renewable energy initiatives. In the meantime, KODIT's green guarantees were not yet fully optimized to address the diverse financing needs of the SMEs that wanted to shift toward the sustainability. And at the time, in 2000s, a structured approach to green finance had not yet formed, and greenwashing risks were very difficult to detect, and cooperation between public and private sectors remained limited. State-owned institutions also lacked strong synergies, which prevented the sector from utilizing collective strengths. So in 2021, KODIT has introduced specialized guarantee products that better support the SMEs in their green transition. So like cooperation among government institutions, including these different ministries and state-owned enterprises, has also been improved. So next slides will cover these developments in more detail. So this slide shows us the product for bank loans, and the first one is Green Guarantee. It was introduced in 2021 and with the support from the Ministry of Trade, Industry, and Energy, and has been operated under a dedicated fund to enhance financing for renewable energy enterprises with high carbon reduction potential. So like this special guarantee offered higher coverage, lower guarantee fee rates, and increased limits for eligible enterprises recommended by the Korea Energy Agency. So it is noteworthy that we have been collaborating with KEA, or Korea Energy Agency, definitely because they have more expertise on the tech evaluation of the green SMEs. So it was kind of an effort to prevent greenwashing in the SME sector. So we collaborated with this agency, and they provide us very good information of these SMEs with green technologies. So it's kind of a collaboration between tech sector and the public financial sector. Moving on to the second guarantee product for bank loan. It is Green Fair Transition Guarantee, which was introduced in 2022. And actually this funding came from Ministry of Economy and Finance to help enterprises shift to low carbon economy. So like unlike green guarantee product that I have introduced earlier, this program has a broader scope and supports more businesses that commit to a green transition. So just like the green guarantee product earlier, it also provides higher guarantee limits and lower fees and increased coverage ratio to strengthen the financial support. And moving forward, this guarantee product's name is Green Venture Guarantee, and this program supports venture certified enterprises that develop, own, or plan to manufacture climate tech innovations. So like along with the standard evaluation of traditional financial, non-financial, and qualitative factor evaluation in KODIT, this guarantee includes a climate technology competent assessment as part of the technology evaluation. So, okay. Everything's fine, right? So like KODIT branch offices handle basic assessment of this tech competency assessment, but cases requiring high volume of guarantee evaluation and this advanced engineering knowledge are reviewed by a specialized team, specialized unit with engineering expertise, and definitely it's not my area of expertise. Those of these engineering expertise have like PhDs in the engineering and like chemical engineering and environmental engineering, so they can carry out this very specialized evaluation in our specialized unit. So like this tech evaluation framework may make a change to about like 10% of the entire final credit score. So those are the enterprises with relatively low financial scores. Scores from the financial analysis, they can still get guarantees with this tech analysis. And moving forward, and this is the last guarantee product for bank loans, and it is named Preferential Credit Guarantee for Carbon Neutral Enterprises. Also, we have been collaborating with Korea Real Estate Board because they actually provide us the information of the SMEs building where the energy, how much energy consumption has been made. So like we can compare this different data of the energy consumption for like last few years. So if there's kind of a save in the energy consumption, then we can provide this specialized credit guarantee product to the SMEs, even though they have relatively lower financial score in the analysis. And moving on to the next slide. This is a little bit complex, but I'll give you a very, very brief explanation. So unlike other credit guarantee institutions in overseas, KODIT provides guarantees for ABS or asset-backed securities. Its another name is PCBO, Primary Collateralized Bond Obligations. So green ABS is issued under KODIT's PCBO guarantee scheme and using corporate bonds from enterprises that meet the K taxonomy criteria as underlying assets. And this significantly lowers the financing cost for SMEs as Korean government actually partially subsidize the interest payment of the green businesses. So like only enterprises that have been approved by Korea Environmental Industry and Technology Institute, also is one of the state-owned institute, very specialized in the tech evaluation. And so the SMEs should get the approval from this KEITI to apply for this guarantee scheme. So like the ABS issuance steps are really complicated. I'll give you more details at the next slide. So this slide explains the securitization guarantee process and how KODIT enhances SME financing through credit guarantees. So basically the same process applies to green ABS. So first, SMEs seeking financing have to go through a credit assessment by KODIT to determine their eligibility. And once approved, a securities firm contracted with KODIT should purchase corporate bonds issued by SMEs, and these bonds are then transferred to the SPC or special purpose company. I mean, the name could vary from one country to another. Some countries name this SPV, but we name it as SPC. Anyhow, this SPC is established by KODIT to manage the securitization process. The SPC then issues senior CBOs in the market, and to reduce the credit risk, banks provide a credit line to absorb potential losses, and KODIT guarantees this credit line to enhance the credit quality of senior CBOs. So eventually, the senior CBOs, the credit rating is improved up to AAA with the guarantee from KODIT. And to distribute the risk effectively, this issuing SMEs retain full ownership of the subordinated CBOs at the same time, and this ensures that they share the financial responsibility and align their interests with investors. So investors purchase the senior CBOs, and this low, because it's a risk remote asset backed by KODIT, is very safe and very effective way of providing this liquidity into the SMEs. And moving forward, KODIT also provides credit guarantees in the PPP sector as well. So basically, we have two different funds in our in Korea Credit Guarantee Fund. The first one is SME Unit Fund, and the second one is PPP Fund. So KIFC, which stands for Korea Infrastructure Credit Guarantee Fund, KICGF it is managed by KODIT, but its financial statement and the risk management and evaluation system is completely independent from that of SME sector. So I have been working in this department for many years, so I know how different it is. So basically, these guarantee schemes applies very high guarantee limits. I mean, per project, we can apply about $1.3 billion of guarantee limit. And unlike this SME sector, we cover this project financing sectors. So basically, the target facilities are like roads, rails, bridges, and tunnels. But at the same time, we make a lot of focus on the environmental sector as well. So lately, we have been providing a lot of liquidity to this project for the water purification project and the sewage wastewater projects, treatment projects as well. And moving to the next slide, this is really complicated, and this is a typical flow chart of the BTO or build, trade, and operate model in PPP of Korea. So, because we are really short on time, I'll skip this slide. If you have any questions, you can just email me later. Moving on to the ESG evaluation system. So lately, in 2023, December, we have introduced the ESG evaluation system beside our traditional evaluation system based on financial and non-financial quantifiable analysis. So basically, we cannot really apply this ESG evaluation system to all enterprises simply because, these small businesses, they are not really ready to carry out all these responsibilities. So as you can see on this slide, the target for this evaluation is only for these mid-sized enterprises or larger. So these small businesses with less than 10 full-time employees, they are not eligible for this kind of evaluation. And there are some incentives for applying this evaluation. Something like we apply higher guarantee limit from time to time, and the approval authority goes down, so we can make a very fast decision-making on the issuing credit guarantees. So in ESG, there are many different evaluation factors for this ESG evaluation criteria. There are 3 core pillars covering 12 themes and 32 factors. And we have our own ESG rating, which ranges from ESG 1 rating to ESG 7 rating, and obviously ESG 1 is the highest one. And KODIT's ESG evaluation combines both quantitative and qualitative assessments, and with all these qualitative factors assigned numerical values to determine the final rating. So basically, we try to stand in line with this PCAF, which stands for Partnership for Carbon Accounting Financial Standards, for accuracy in especially in the environment evaluation. But still, I think it's our obligation to expand the target of this evaluation, because so far, to be honest, we have been applying this evaluation criteria to all leaders of relatively large enterprises. So I think many other guarantee institutions would have very similar concern. So probably we have to further promote this knowledge sharing and gain the best practices from others and develop further on this evaluation system. And moving forward, so I would like to highlight some of the performance of KODIT's ESG for the last few years. Initially, around 5 years ago, we developed ESG management capacity assessment, which have 4 different ratings for this ESG assessment. But later on, we have developed ESG evaluation system with 7 ratings with more precise evaluation factors. And also, as I said before, we have a specialized unit that carry out this climate change response technology evaluation. We have 10 different ratings for this. Also, we have a very precise GHG emissions measurement tool. The formula of this tool is activity data times GHG emissions factor. So the activity data means the data that quantifies greenhouse gas emission activities such as electricity consumption, water consumption, and waste disposal. And GHG emission factor, it is a coefficient representing the amount of the GHG emissions generated per GHG emission activity. So we benchmarked a lot of cases of other countries, and we stand in line with the guideline of the Ministry of Environment in Korea when we calculate these numbers. And moving forward, lately we have been collaborating with these global agencies like the World Bank Group. Especially in 2023, they made a visit to KODIT headquarters to have knowledge sharing on green guarantee schemes, because they recognized our influence in the Asian credit guarantee institutions on these green initiatives. Also, as a key member of these Asian credit guarantee institutions, KODIT contributed to the World Bank Group's 2022 guidelines for integrating climate change into public credit guarantee schemes for SMEs, which is right here. Maybe you can see the cover page of the book. Yeah, we actually made this book along with World Bank. Also, we collaborate with ADBI a lot, so we're planning to send a second D to ADBI in this energy sector to have more collaboration on the green energies in few weeks. And moving forward, and this is the last slide of my presentation, so please just stay with me for 1 more minute. Superbin, is one of our guaranteed SMEs, and it has really revolutionized waste management with AI and robotics. So basically, one of its key innovations is an AI-powered vending machine, which is located right here. You see? Yep. So it is a very simple mechanism. So when you put these plastic bottles or aluminum cans into this vending machine, they give you reward points, right? And these points can be converted into cash, but not a lot. I mean, I've been putting these water bottles for many years, plastic bottles for many years, but you have to put 70 plastic bottles to buy 1 bottle of water, but still they pay you, right? So it takes time, but it really revolutionized this entire process. So these kind of vending machines can be found in the smoking areas, in the parks, and elsewhere. So it's a really environment-friendly facility. And this company has been guaranteed by KODIT for many years and has really witnessed this stellar performance for the last few years. As you can see, sales volume has dramatically increased. All right, so this is the end of my presentation, and thank you very much for your undivided attention. I would be happy to answer any questions that you might have. All right, thank you.
Okay, thank you very much, Jun. You could be seated for a while. It seems like the organizers want the discussion session to be happen for 5 minutes, 10 minutes. Is it okay with 10 minutes? Okay, so we're gonna have that discussion for like 10 minutes, but still we have to make the stage settings. So thank you very much for both presentations. We have like excellent experts here in green finance. So I'm very excited to have a discussion with these experts. Yeah, I think almost the stage is set up, right? Okay, so because we do not have that much time, I'll proceed with the discussion. Definitely because I'm just the moderator who will not ask any kind of questions. This is a very, very valuable time. As you know, we have experts here, so it's your chance to ask any kind of questions to our speakers. So please open to the stage. Yeah, Dr. Yoshino.
Thank you very much. Excellent presentations. I have a question for sector by sector. About the CO2 emissions, services sectors are less compared to, in general, manufacturing industries. Then when you look at the amount of CO2 emissions, credit guarantee or bank loans, should we look at the actual amount of CO2 emissions, or what are the indicators we should watch? For example, transition means how much CO2 has been reduced every year. That is very good for sector by sector. But if you look at absolute value of CO2 emissions, in general, manufacturing industries are much more compared to services. So what kind of indicators should we look at it, both in transition finance and also credit guarantee?
Okay, seems like who's gonna go first? Dr. Lee? Yeah, thank you.
It is I think it is, you touch the essence, and one of the key area investors are really concerned about it. But definitely it is GHG emission data and also methane, both, right? And then the major challenge for this, whether it is really the actual amount of CO2 emissions, how we say this is actual emissions. So that is beginning from the measuring and the reporting, and then it goes to the area of the certification. Because if you argue this is really actual emission, so there is a specific process and also the policies to support, this is really the actual amount. So we should have somebody provide a certification. So the current discussion here, though we really acknowledge that we need to do what we need to do, but in terms of specific numbers, beginning from measuring and the reporting, we are currently in the swamp of the measuring and the reporting, pretty much. So it's basically some of the pilot technology and using very specific, for example, like a smart meters and check, real-time emissions reduction data, GHG emissions reduction data, and sometimes without verification process because of that specific technology already trusted by the investors in that case. But if somebody argue we still need to verify those data, I think it is still the verification process, and we should, to take that forward. So we acknowledged actual amount of, the GHG reductions and methanes and should be there. But now the current status, we are still handling the issue of the measuring and the reporting, and to avoid the greenwashing. And it is really many countries and really piloting specific technology like a smart meters to look at, this is really the actual amount of GHG emissions. But it is definitely within the country's NDC, as you know, nationally determined contribution, because what we say the GHG emissions, it is very collective amount, right? But this collective amount in beginning from companies, and these companies large and small. Large companies, they have a very specific reporting requirement. But our presenters already mentioned, it's not yet applied for all of these large companies. It's still thinking, right? Still watching, who is running faster or ahead in the international area. But SMEs, and as you know, we really need to provide a help, but it's not really actual data. It is sort of the guessed data or estimated data based on the specific formula. So I think its reality is we should take that the actual amount of GHG reductions, but it has an issue of the reporting, measuring, and certification. But also the facing challenges also different between the large companies and SMEs, and how to handle this actual amount of the rear emissions reduction data. So, I really want to say this is the one consistent measurement, but honestly, at the moment, and we don't have that one consistent internationally recognizing calculation. And we have PCAP help and all others, and ISSB is moving towards, but we really need to really certify what is really the actual amount of GHG reduction. Yep, thanks.
All right. So when it comes to the credit guarantee institutions, I mean, it's a very tricky question. But in KODIT, just unlike other credit guarantee institutions like in Asia, we carry out our own credit evaluations, as I just said. So on-site investigation is a very important part in this evaluation. So we make investigation on-site by making visit to these SMEs head office or manufacturing facilities and check whether there's any kind of immoral fabrication of the data or documents. Also, we collaborate with these energy suppliers like electricity suppliers, which is a public-owned company, also a gas supplier, which is also a public-owned company. So this data, we share this data with these suppliers. So definitely we can compare the usage of the data last like 3 consecutive years. Then we can definitely identify if there has been any kind of decrease in the using of this energy by using its own solar panels or other renewable energy channels. So that's one of the ways we identify the their effort towards the green initiatives in the SME sector. But to be honest, these really small businesses, we cannot ask these people to have their own solar panels and use renewable energy. So definitely, I think we really have to work on this area and share more ideas all together. But I think on this, we are further along today than we were yesterday and making an effort toward better tomorrow on this issue. So probably these scholars learning scholars like Dr. Lee may give us a good advice on this issue later.
Okay. I just want to stress what gets measured is what gets financed. So, the Professor Yoshino always touched the most heated part, and it's that measurement part and actually the data. So one of the examples what ADB is currently doing, it's working together with one of Japan Stock Exchange Group and using the digital technology. And based on the distributed ledger technology, DLT technology, we use the Boostry concept. And then using this Boostry and the DLT, we kind of try to use so-called the sustainable finance help and putting the real-time data of the GH reduction in the website so that the investors who invested purchasing the bonds, specifically labeled green bonds or transition bonds, and getting away from the concern of the greenwashing. And so because of the technology itself, and no need to be verified, but still, if that is a different perspective, and number one is blockchain technology has a lot of money it's upfront invest, right? So how we can handle that one? So we can go for closed blockchain, not open blockchain. And also if it is required a lot in terms of reporting investment infrastructure, and we can go by just smart meters, but it still needs, the investment. And are you sure the smart meters will function in regardless of the temperature or other natural disasters? Still, there is a concern. But that's why I say regional cooperation is very important to share all of these pilots, how these working together, what kind of data we'll use. Why? Because like I said, what gets measured is what gets financed. Right, thanks.
Oh, thank you very much for the good question. And it seems like we're running out of time. The organizers wants to finish this session. And actually for Dr. Yoshino, in the afternoon session, we have Dr. Pyo. He's his whole presentation is about the measurement of the GHG emission. And if you have more questions, I think we have some empty seats here during lunchtime, so you could ask Dr. Lee or Dr. Kim during lunch. We have empty seats here. So we have to finish the panel discussion. So thank you very much. See you in the afternoon.
Ladies and gentlemen, welcome back. I hope you enjoyed the lunch. We will now resume the second part of session 5 under the theme of the role of green credit guarantees in facilitating the green transition to a sustainable economy. To facilitate this session, I would once again like to invite our moderator, Mr. Taehyun Lee, to the stage. Please welcome him with a big round of applause.
Good afternoon, everyone. Did you have a nice lunch? Korean cousin, was it quite good enough? Sorry for rushing out for the first morning session, and probably the afternoon session, I will keep two things in my mind. The first is the time management, because I don't want to keep you guys all until late night today, so I will make sure that we finish the session 6 by 5 p.m. And the second is I'll try to make sure that I introduce our experts. So welcome to session 5, part 2. And as I mentioned earlier, session 5 is divided into two complementary parts. So part 2 will focus more on the technical and regulatory foundations, including green taxonomy frameworks and measurements, reporting and verification, MRV systems, and how regulatory frameworks can support credible green finance. By combining these two perspectives, we hope to offer a holistic view of how green credit guarantee can effectively support SMEs' green transition. So our first speaker is Dr. Leo Park, Vice President at Capture6, a climate tech startup specializing in water-positive direct air capture DAC technology. Dr. Park has extensive experience in climate finance, sustainable finance, and carbon markets, having held senior positions at the Green Climate Fund and Climate Works Foundation. Today, Dr. Park will present on evolving green finance and taxonomy, explaining how taxonomy frameworks are evolving globally, why they matter for green finance, and how they help enhance transparency and credibility while reducing greenwashing risk. Dr. Park, the floor is yours. Please give him a round of applause.
Hi, good afternoon. Thanks for the warm welcome. As you introduced, my name is Leo Park. You may wonder what the guy working in climate tech is doing, talking about green taxonomy today in this room. So just wanted to let you know that I wear a few different hats while working for Capture6, which is a US-based climate tech startup. First of all, the reason why I was invited, I serve the Green Finance Council within KODIT. When I was appointed, a few months ago, last year. So that's kind of my connection to KODIT. And then, as you mentioned, I have about 17 years of experience in climate finance. Before, again, I joined the Capture6. And I also support one of the the NGO Green Finance NGOs Coalition for Our Common Future, doing a lot of sustainable finance related work as well. And then I also act as an adjunct professor at university teaching sustainable finance. So yeah, it's my great honor to be here. Again, back in my day at the Green Climate Fund. Are you familiar with the Green Climate Fund, by the way? Yes, no? No? Okay, never mind. The GCF just, again, as one of my previous employers, they are headquartered in Incheon. I'm sure you're all familiar with Incheon. And they were backed by the UN, the framework on climate change. And then their mandate is to support many of the emerging markets. So that was the role that I did, especially how we can spearhead the green finance across the board. So I actually partnered with many of the Asian countries as well, including the Philippines, Malaysia, Indonesia, Mongolia, for example. So pretty familiar with what you're trying to do. So today I was asked to give a little speech about the green taxonomy. But I was just curious how familiar you are with the the green taxonomy, because there might be some countries who have already implemented the green taxonomy to spearhead the green finance efforts. So I'm just curious, can anyone raise your hands in case you're already familiar with the green taxonomy? Oh, which country?
Well, I'm based in Japan.
Are you with the ADBI? Yes. Oh. Sorry, that doesn't count, unfortunately. Yes? Indonesia? Oh, I worked very close with the PTSMI and the the Ministry of Finance on green finance as well. Are you with the Ministry of Finance or? FSA. Oh, okay. I also work very close with OJK as well on green finance. Welcome. So great. No, the reason why I asked is I don't want to, give you like a full lecture on green finance if you're, or green taxonomy rather, if you're already familiar with this subject. But given, I'll keep it very high level, but do let me know if you have any questions after I give my speech. So green taxonomy, the effort was mostly led by the EU many years ago, and then was followed by many other countries, including the South Korea, where I'm also originally from. So just wanted to let you know, the definition, what they are trying to achieve, some of the principles and the key objectives of a green taxonomy. And this is, of course, not like a regional effort, and it's becoming really more and more like an international kind of effort, and it's being supported by many of the international like coordination bodies, etc. as well. And it has a lot of support from entities like the UN and OECD. So just wanted to highlight that this is really a global effort rather than like a single country or the regional effort. But single countries do come up with their own versions of like taxonomy, because they have to make some kind of adjustments and customize the overall framework that is better aligned with the country's goals. So as you can tell by the name, green taxonomy is really about identifying which activities are considered green versus non-green or brown. Okay, and then the key objective is, again, first I guess, to prevent like greenwashing, and second is to help the actors, the market players, to spearhead all these green investment or green project activities, so that they can find out like what kind of activities will be considered under green taxonomy and how they can then benefit from all the government, also the private type of like financial instruments that can support their activities. And then there are many three principles when it comes to like green taxonomy. They, of course, it has to contribute to specific environmental goals. So it's more than just like climate activities, but it's supposed to support other types of environmental interventions as well. And then it has to make sure that there is no significant harm to any of other listed like environmental activities. Because you're interested in doing like certain activities, but you have to also make sure that that activities you're interested in implementing does not create any kind of negative impact on other environmental or social activities. So it goes by DNSH, which is abbreviation of the do no significant harm. And then again, has to be carried out in compliance with the minimum social safeguards, most of which are set by the UN or the OECD. And then there are 6 objectives. So you can, as you can see, it's very much focusing on the climate-related activities, as climate change mitigation and adaptations are both included in the 6 key objectives, but it goes beyond that. So it also has the sustainable use and protection of water marine resources, because again, the water scarcity and how we can protect it in the marine ecosystem is also very important, including for climate, but overall for the overall environmental protection as well. And then another objective is the transition to a circular economy, waste prevention and recycling. I'm sure, including Korea, this is one of the biggest concerns for many of the emerging markets, how to manage the waste and how they can recycle to make sure that we create a circular economy. And then pollution prevention and control, protection of a healthy ecosystem. So these are the mainly 6 objectives. How the green taxonomy is supposed to be designed to support. So again, why green taxonomy? I already told you one of the key objectives is to prevent the greenwashing. Just wanted to show you this picture. I mean, of course, we need more solar PV, right, to supplement our the grid system. But if you have to cut down the trees, etc. First of all, trees are a very important resource, right? Because it absorbs CO2 from the atmosphere. So there is definitely climate aspect we have to consider. So we really have to think from very a holistic kind of a type of overview, right? And make sure that when you net carbon emission reduction and removal as well as a release, there always has to be net impact that we have to generate. So I think this, again, the picture is a very classical example how, some kind of green activity can still be considered not like 100% green if it involves like, the creating some kind of a harm on other environmental resources, such as like trees, as you can see. And also, there has been like a huge demand because many of the actors, as well as in the financial intermediaries, they wanted to support some of the government initiative when it comes to like green finance, but at the same time, they were puzzled with regards to like what kind of activities are considered green, because not many people or actors knew about, or didn't have like clear guidelines as to what kind of activities will be classified as green activities. So they kept asking the government to basically set the rule. So it's really about the rule setting, right? And then coming up with like green taxonomy framework, or even legislation. This was a response by the countries to react to those type of like a market demand. So just wanted to let you know this was one of the like outcomes of like negotiations, again, the rule settings, different many stakeholders that are involved. And also on the, I'm sure many of you are very much interested in creating or producing or even analyzing, certain data so that you can actually track, right? You cannot manage without being able to track the data, to create and track the data, right? So this is also one of the reasons why, the green taxonomy can be used so that, all the stakeholders involved, especially the policymakers, can actually, track and analyze the data they can gather based on the very clear, the green taxonomy, they have set forward. Not sure if it's, I don't think it's very legible, unfortunately, apologize. So these are just tables show some of the users of the taxonomy. Again, I'm not gonna go into the, every single detail, but main actors include, banks and financial institutions, and financial regulators, investors, green sustainability bond issuers, and other relevant actors, such as certifiers and verifiers. I know there's a session about, the monitoring, reporting and verification, MRV in short. So this is something probably relevant to, those sessions as well. And then policymakers, there could be, and also others as well. And then, so all of it, they have like somehow like common as well as like a different needs, depending on what they want to, what they have to like achieve. But just wanted to like let you know, what kind of main actors are involved in on the utilization side of the taxonomy. So again, I'm using a lot of like, the information or the, the paper that was published by the World Bank. I'm sure ADBI has done the same. And they also try to give very clear guideline in terms of how one can, or country, when they're interested, develop like green taxonomy and what are the processes they need to like develop and follow. So these are the generally like 6 steps the World Bank has recommended when it comes to developing a green taxonomy. First is to define the strategic goal. So why do we need like, green taxonomy, right? What's the strategic need? So there has to be a lot of like consultation, amongst the different stakeholders to drive and or identify very clear strategic goals when it comes to why we need to develop a green taxonomy. In case of Korea, I cannot remember clearly, but it took like many years. It was mostly led by the Ministry of Finance in consultation with our Financial Services Commission, and then there are of course other financial institutions, mainly those state-owned entities that they all have been involved throughout this consultation process, which is very much needed, and also it's equally important to hear voices from the private sector actors as well, since they are the one who will be providing all this capital that is very much needed to spearhead the green activities. And second step is to select environmental objectives that are relevant, again, countries' sustainable development priorities and agenda. This is where there could be some kind of divergence amongst different interests of the countries, basically. Like, for example, Korea, we don't produce oil and gas, right? So it might be activity related oil and gas extraction might be less relevant to Korea's context, whereas it will be way more important for countries like Indonesia, for example. So just wanted to let you know this is how there has to be some kind of customized environmental objectives that one needs to consider. The third step is to identify, specify sectors that are expected to deliver on the objectives. Again, many countries have different economic sectors, so you have to really take this into account when it comes to developing your own green taxonomy. And the fourth step is to assess and select specific investments in these sectors that can contribute to addressing selected environmental objectives. Similar, just going into getting into more kind of nitty-gritty details of what one needs to do, and then try to just identify what kind of specific investments that you have to consider, based on again the sector level discussion, and then the objective at the high level, the key objectives and strategic goals. And then the next step is to identify intended taxonomy users and beneficiaries. So who will be affected by the green taxonomy and who will be the users of the green taxonomy? So the country or the rule setter or policymakers really have to think this through way in advance, right? So that they can be all part of this consultation process. And then finally, the outline reporting guidelines for market actors applying the taxonomy. So again, it doesn't make any sense once you issue the guidelines, but you don't know whether all the stakeholders or market actors involved have been following the guidelines, etc. So it will be very important for somebody to track those the data, as well as to make sure that there is a regular consultation process. So again, very similar, but probably more steps involved. I'm not going to go into details again, but this provides. And I'm not sure whether you have the access to that, but again, happy to share the deck so then you can also take a look at your leisure. So, like I said, there are country level stakeholders, but there are also international or the regional level efforts that are happening when it comes to this kind of rule or the standard setting. So the entities that have been involved include Green Bonds Principles, Green Bonds Initiative. China has been really spearheading this effort for a long time as well. Already mentioned here about EU. ISO is a standard that they have been involved as well. Korea, Malaysia, Mongolia, Indonesia. So there are, again, there are a few countries that have been really driving this effort for many years already. And then I already mentioned to you that EU taxonomy, how they have been really developing this since I don't know, many years ago. So many countries, including Korea itself, have been really following kind of their leadership in this domain. Some of the case studies. So again, I'll probably keep referring to this EU because again, they are kind of the most well-known green taxonomy out there. But it's very similar to the earlier slides I showed you earlier about the principles and 6 environmental objectives. And again, this slide shows you what kind of steps, right, or what kind of questions that you need to consider or be ready to answer while again drafting this type of taxonomy guidelines or principles. So it will be very interesting for you to take a look as a policymaker. To see what kind of questions or the suggestions or recommendations, whatnot, that you do have to think through and do the very thorough consultation process with all the relevant stakeholders involved. Same. So depending on, again, it shows you if it's a climate mitigation versus adaptation activities, they do come with the very different types of questions and things that you have to consult. So it just gives you very specific kind of a process and steps that one can follow. And then, EU has been publishing a lot of, the research or the data to basically track, how the EU taxonomy they have launched has been applied to the different sectors. And then this is one of the very latest report they released, and then they found the activities were prioritized as these sectors, as you see on this slide, are responsible for over 80% of direct greenhouse gas emissions in the EU. So they are definitely trying to prioritize these 6 or 7 sectors, so that they can make a bigger contribution when it comes to climate change mitigation in their jurisdiction. And then it also shows you how green taxonomy can be applied at the the company level, right, rather than at the country or the sectoral level. So just shows you how one company can try to analyze right? How the taxonomy will have impact on their business activities. And the key terms for reporting on the EU taxonomy. So yeah, they will help you like find out like whether activities are eligible or not eligible under the EU taxonomy, and or estimated like aligned. So there are some gray areas, right? So it's not always like very super like crystal clear when it comes to like deciding which activities are green versus which are not. So there is like estimated aligned activities, which is kind of I would say like a transitional kind of thing, since we are still working to refine, the green taxonomy as a whole. And then this is like, again, the process that they are following as well in terms of like timeline on the reporting side. Yeah, and then this framework shows like what kind of sectors. So sectors, again, each sector, as you can see, like forestry, agriculture, manufacturing, and it does include some of the, like downstream kind of economic activities. So when it comes to like forestry, this is when you can see, some of the afforestation, restoration, reforestation activities. So again, usually the policymakers try to give very clear guideline in terms of like what kind of like economic activities will be considered under the green taxonomy, and then they try to be very kind of transparent as well. And then of course there has been some argument regarding some of the like the business activities which often involve like nuclear activities or some of the oil and gas type of exposure as well. So there have been some policy level negotiations that needs to be taken into account as well. Yeah, and then this is a report in case you're curious. Basically shows some of the performance of the EU taxonomy and how it was applied to some of the the sectoral level like in investments as well. So I've less than 1 minute, but so I'm not gonna go into the explaining this. But do take a look, and then if you're interested, I would encourage you to actually read the paper. And then moving to like Korea, again, Korea is relatively new, but still, I cannot remember, but it must have been 2 or 3 years ago. Korea launched, officially launched this K green taxonomy. Everything has to be, with K these days in South Korea, right? And then they did try to follow, the EU model, use the, similar like 6 objectives as well. But if you look at each economic activities, there is a bit of like difference for sure, because we have a different economic like structure. So this table shows you the differences and similarities between EU taxonomy and the Korea's green taxonomy. And then just more details, information about how government level stakeholders have been involved in developing green finance, the green taxonomy, as well as the implementation side as well. And some of the case studies, and also KODIT is one of the leaders when it comes to like implementing like green taxonomy, managing their investments. So I know time is up, so I'll be here until the end of the session. So do feel free to come and ask me if you have any questions and have further follow-up discussions. Thanks so much.
Thank you very much, Dr. Park, for your comprehensive and insightful presentation. Actually, today during lunch, Dr. Park told me that he had to grab a red-eye flight from Singapore today in the morning to attend this workshop. So one more round of applause for Dr. Park, please. Thank you. And so our next speaker is Dr. Dongjin Pyo, Associate Professor at Changwon National University, specializing in financial economics and climate finance. Prior to joining academia, Dr. Pyo worked at the Financial Supervisory Service, FSS Korea, focusing on financial stability and systemic risk analysis. I would also like to highlight that Dr. Pyo has a special connection with KODIT. Through KODIT's joint research program, which pairs KODIT staff with external experts, Dr. Pyo collaborated with our team to develop methodologies to measure financed emissions from credit guarantee products, a pioneering initiative within Korea's guarantee industry. Today, Dr. Pyo will present on facilitating green solutions through MRB for financial institutions, emphasizing the importance of robust measurement, reporting, and verification systems of green finance. Dr. Pyo, please proceed. Big round of applause.
Good afternoon, everyone. My name is Dong Junpei from Changwon National University. I'm very happy to present on this topic. Some of you may have some familiarity with this topic. If these materials are very familiar, please take a look on what I did with one of the member at KODIT and make a comments, or you can criticize on what we did. So this is the first time to introduce my work with KODIT. So please make a comments. If you have any question, please feel free to ask. Okay, this is outlines of today's talk, but initially I plan to cover all of these topics, but I think it is impossible to present every details of this. I read as a moderator, Lee mentions, my focus will be a little bit on measurements. So, and the other, if time allows, I will briefly cover on the reporting and then verification section. These materials are very straightforward to understand. So, so why we need the MRB frameworks? As finance institutions or the non-finance institutions are facing increasing pressures from various stakeholders, including investors, regulators, to disclose their carbon footprints. So MRB frameworks actually provide a structured approach for assessing. Assessing is actually related to a measurement of carbon emission of finance institutions and reporting and verifying carbon emissions. So this presentation covers basic principle and latest standards and the methodologies that I work with. So our focus will be, primary focus will be on the associated challenges, how I tackle or how I handle with those challenges. So you guys already know what MRB means, right? MRB actually consists of three components. First is related to measurements. Measurements, quantification of direct and indirect greenhouse gas. Second component is reporting. Disclosure of emissions data in accordance with the regulatory and voluntary frameworks. The final component is verifications. Verification process is related to the third-party assessment to validate reported emissions, ensuring accuracy and credibility. So why is the MRB important? Why? Because there are several reasons I summarize here, but it strengthens accountability in financial markets by requiring institutions to track report finance emissions. So we're going to define finance emission later on in the upcoming slides. And also suppose from the perspective of risk management, is about risk management by evaluating finance institutions' exposure to a carbon-intensive asset or identifying potential climate-related financial risk. It also ensures compliance with the international climate commitments or domestic climate regulations. And from the perspective of investors, this MRB framework facilitates informed decision-making in sustainable investments. So here I put several key standards or frameworks, whatever we call, which seem to be very important in the MRB frameworks. This list is not comprehensive. There are other types of frameworks. Each of these lists relate to one of the components of MRB frameworks. So the first framework that I like to look at is CAG protocol. This is a framework which categorizes emissions into scope at the different scope level. You guys might be very familiar with the different scope emission at the different scope level. The ISO 14064 is the framework which is related to international standard for greenhouse gases quantifications and verification. The third framework is called PCAP, which provides the methodology, very simple and very intuitive methodologies for measuring the finance emissions. And finally, a GRE frameworks actually provides a comprehensive ESG carbon reporting. So, how can I go back? GAD protocol actually defines 3 types of emissions. First emissions is called Scope 1. Scope 1 relate to the emissions arising from direct emissions from on control sources of fund. Scope 2 actually related to indirect emissions from purchases energies of the financial institution or non-financial institutions. Finally, Scope 3 emissions is the indirect emissions from the value chain activities. So out of these 3 emissions, which one will be most difficult part? Can you guys guess? Yes, Scope 3 emission. Scope 3 emission is particularly relevant for financial institutions. Because what? Because why? Because financial institutions do not generate emissions, much of their emissions out of their own businesses. Indirect emission takes a large part of their emissions. So that's why many like a pickup frameworks actually focuses on this Scope 3 emission, which is called finance emissions. So we're gonna look at how they define their finance emissions. Is there anyone who are familiar with this concept? Anyone have a chance to look at what the finance emission is? No? Okay, it's good. The pickup provide a structured methodology to quantify these finance emissions. As you can, this is not rocket science, you know. It's very simple. There are only 3 elements. First element is financial exposures. Financial exposure is referred to outstanding amount by various financial products the financial institution provide to its clients. So the types of products actually range from equity, whether it is listed or unlisted, or corporate bonds, even sovereign debts. We can calculate finance emissions for even sovereign debt. The second element of financial emission is total entity value. This is firm value. So what if the firm is not listed in the stock market? How are you going to value firm's value? Is there anyone have a clue? If a firm is listed in the stock market, whose stock is traded on the public market, we can easily estimate what the firm's entity value. But for unlisted firms, we have to come up with some other measures. We often use book value also of the firm. That's one of the challenge. I think that's one of the challenges that we face in measuring, applying these methods. But it's okay. Anyway, we can use book value of the firm, and the final component of finance emission is simply the firm's total emissions. So in addition to finance emissions, the pickup actually develop other types of emissions, which are called facilitate emissions and the insurance associate emissions. Facilitate emissions refers to emissions arising from the activities of underwriting of debt and equity insurance. And insurance associate emissions refers to emissions arising from insurance activities. But I haven't put the exact formula for this emission, but the basic structures are very similar, not exactly same, very similar. So whole structures follow these structures, but little variations. So if you are interested in, just take a look at all the official documents for the facilitate emissions, insurance associated emissions, which you can freely download from the pickup website. But for the perspective of credit guarantee companies, but unfortunately, no methodologies have been proposed for credit guarantee products so far. So I have worked with one of the staff members at the KODIT to come up with some methodologies to derive to quantify the finance emission for credit guarantee products, which we will cover in the upcoming slide. So, what's our challenges? I summarize 3 major challenges. First challenge is we don't have enough data. Most of small and medium enterprises do not report their carbon emissions. In that case, we have to come up with other measures, right? Without emission data, we can calculate finance emissions. Second, the unlisted fund valuations. I think book value often mispresent actual value of the fund, which might cause error in emission calculations, right? Third, as I mentioned earlier, limited coverage. Pickup framework do not fully address all types of products such as derivatives, complex derivatives, and credit guarantees. So what are the alternative way to apply this framework? First, the simple solution is to use sector-specific emission data provided by PCAP. Fortunately, they provide average emission per economic activity. So you can just adopt these measures if you have sales data of individual fund. If you don't have individual funds sales data, you can apply. Or you should have some sort of the data on the energy consumption. So here I put the table which shows the economic emission intensity of several sectors. So this number refers to amount of carbon emissions per 100 billion euro sale. So I convert it to the Korean currency. So this is one solution. Or the next solution. Another approach is to apply statistical or econometric model to estimate the carbon emission of individual entity. So you in this model, you guys can use a lot of different data, including individual firms data, and the sector level data, and macro level information. So you can. So in this approach, it is very important to continuously update your estimation model as the new data becomes available. Why is that important? Because carbon footprint is not static. Firms keep changing their production level. They keep changing technology they adopt. So you have to refine your model with the real-time data, which will increase the predictive accuracy. So nowadays, in that respect, many industries are exploring the best AI algorithm for precise carbon forecasting, which we will not cover here in detail. So if you're interested in, so take a look at the related literatures to find the related models. So here, I want to show you our frameworks to tackle with challenges for credit guarantee products. So our approach, our model actually consists of 2 parts. First part, we quantify credit guarantee contribution index by combining various financial, at the firm level financial informations. This credit guarantee contribution index captures how credit guarantee companies contribute in securing loan of financial companies wants to have. In the second model, we come up with the carbon emissions estimation model, which incorporates a sectoral level effect and firm size effect. So with these models, we estimate individuals, firms, finance carbon emissions. So combining these two and other informations, we come up with the final, the modified, I want to call this modified finance emissions. So let me show you the exact formula that we employ. Here, firm emissions and attribution factor, which is the ratio of financial exposure to firm's entity value. So this is the same as pickup structures. Now we put two additional measures here. One is contribution index, which we calculate from firm's financial information, specifically asset and debt profile of individual firms. And we just add another information. For each guarantee products, we put the guarantee ratios. So in the original equation, we put just additional two information to captures the essence of credit guarantee products. So I did want to show you what the results are, but the results are confidential information. So I'm sorry for that. I can give you exact numbers of the estimated finance emissions of Korea credit guarantee fund. But if you're interested in this modified approach, you have to come up with other measure of tackling the challenges we're facing now. Okay, now we're done with the measurement part. The next, we're moving to a reporting part. Even though there are many different types of frameworks for reporting related to carbon disclosures, one of the most recognized and famous framework is TCFD. TCFD is established by Financial Stability Board to provide structured approach for climate-related financial risk. The emphasis should be on this risk in this framework. So it recommends the disclosure in 4 key areas: governance, strategies, risk management, and metrics and target. In governance area, the firms are recommended to disclose organizations' governance around climate risk and opportunities. The second area, in the strategy area, firms are recommended to identify actual and potential impacts of climate-related risk. In the risk management area, firms need to describe how the organization assess and manage climate risk. And finally, in metrics and targets area, firms need to report key specific climate-related metrics, including emission level and how much they made progress toward the targets. But one of the interesting or most distinguished aspects of TCFD is that it encourages scenario analysis to assess potential future climate risks. Have you guys heard of scenario analysis? What scenario analysis is? This is what if experiment. What if global warming follows certain paths? What would be the impacts? What would be the potential impact of our exposures in various market? So you have to look at various conditions under which how the impacts will be unfold in the futures. So by running this kind of a forward-looking scenario analysis, financial institution can assess long-term risk and opportunities, because many of global warming scenarios are long-term projections on the global warming path in the future, like 20 years or 30 years later. Or by running the scenario analysis, they can have a better enhance their risk and management practices. So I put the table. So as I mentioned, there are other types of frameworks that you can make a reference, but I don't go over all the details. This table make a comparison, so take a look at if you're interested. But the TCFD is one of the most important and most famous and recognized frameworks for reporting. So here's best practice. I want to discuss further on how to effectively utilize these frameworks. So I named it as best practice. First important thing is to maintain consistency in your methodology in measuring or reporting. So you must apply the same emission measurement method across reporting periods to ensure comparability. So it's better to use internationally recognized standards. Don't come up with your own standards. You can slightly modify them, like I did with KODIT, but stick to the basic structures of the international recognized standards, and use standards reporting templates. If you manually report all if you manually prepare all a process of reporting a carbon disclosures, it is impossible. So you can just refer to CDP examples such as the CDP climate change questionnaire and GRI sustainability reporting standards. These kind of templates are available for your carbon disclosures. And this one is related to a third-party verification, so I will directly go to a verification insurance. Let's assume now we're done with the measurement and reporting. What's going to be next questions? How can you trust those data are credible? How can we tell how much it is reliable to trust? This is where verifications and assurance plays a crucial part. So without independent verifications, what's going to happen? Firms may accidentally underreport or misreport their real carbon emissions, or in some cases, some firms can intentionally misreport their carbon disclosures, which is called greenwashing. And it also strengthens the stakeholders' confidence, supports regulatory compliance. And the verification is not about just checking numbers. By having verification process, we can detect discrepancies between practices and the frameworks, and we can find areas for improvement in carbon accounting. So ISO 14064 Part 3 is one of the most famous verification standards, so you can take a look at it's a document for detail. So there are also other types of challenges in verification process. Well, I summarized 5 challenges, but out of these challenges, which one might be most particularly relevant for credit guarantee companies? I guess it might be the high cost for third-party verification. As you know, most firms are financially constrained. They don't have enough funds to have external verification. This is where a policy intervention can play a role. So you guys, the government can provide the public verification services to those financially constrained small and medium enterprises. So I think this will be, I mean, the future trends will be covered in, I think, next session. So my presentation will be up to here. So thank you very much. Yep.
Okay, thank you. So I think we have to set up the stage again for the discussion. I think we have like 15 to 20 minutes for the discussion, and we will later, when the stage is set up, we will invite the speakers so that we could have a Q&A and discussion. So once again, thank you, Dr. Pyo, for your excellent presentation and for sharing your experience developing MRV methodologies for financial institutions. So I think like we are starting from today in the morning, we're talking a lot about green, and it feels like I am also learning from this a lot of presentations. So we heard a lot about scope 1, 2, 3, and we figured out that financial institutions emissions are related with scope 3. And we also heard about that KODIT is the first guarantee institution to be in the PCAF, and we also heard about PCAF, why we are doing this calculation for the emissions. So the stage is ready. I'll invite the experts, presenters to the stage. So we have Dr. Pyo on the most right side, and we have Dr. Park here. So if you have questions, please like designate the person you want to ask. So now I'll open the stage to the floor. So probably, yeah, definitely I was looking for you. Yeah, Dr. Yoshino, please the microphone.
Thank you very much. Very interesting presentation. I have a couple of questions. First one is you are mainly focusing on carbon dioxide. However, there are many other greenhouse gases, NOx and others. And should we focus all of those greenhouse gases by putting some weight, 0.8 times CO2 and 0.1 times NOx and so on? So I'd like to know the exact measure of various greenhouse gases that which we should, how should we handle? And second one is nuclear power is a very difficult subject. However, France is concentrated on nuclear power. And then their greenness may be much better than Japan. But how do you deal with the nuclear power in your analysis? And last one is it has to be all the countries has to follow the same method. But Russia may not follow. Some of the countries may not follow. What would be the best way to make all the countries will go in the same manner? So those are three questions. Thank you very much.
So it seems like we have 3 questions for each expert. I think it's the question for both of them, yeah. So anybody, if you have like answers, so who's gonna go first? Yeah, Dr. Park?
Yeah, sure, happy to kick off. Great question. So regarding your first question, I'm forgetting the terminology. There is a global warming kind of factor. So you know, CO2 is 1 ton of CO2, right? But at the greenhouse gases, you have to multiply by like 21 if it's methane, or if it, so these are the like science-based numbers that you can apply. So it's not just about the CO2. I just wanted to make this point super clear. It does include all the greenhouse gases for business, the economic activities. So just hopefully that clarifies your question. Nuclear again, like I try to convey. I mean, it's all part of like a negotiation, right? And you have to take into account like very country-specific circumstances, right? So you mentioned France. So in the case of EU, I think initially there was a very strong push to exclude nuclear, but because France, of course, regional influence, etc. I think they did manage to. This is how they managed to include the nuclear. I think in Korea we included nuclear as part of like a transitional kind of activity, and there has to be very specific measures to make sure there are any environmental negative impacts potentially caused by nuclear. So there is some kind of safeguard mechanism that I think those because it's not not every country has nuclear, right? So it has to be very specific. So I don't know about what's happening in Japan, but I'm sure, there's like a green finance organization in Japan, and then, all these Ministry of Finance, etc. I think they have been very kind of thorough. So I would definitely encourage you to take a look at like how they've been dealing with like, the nuclear issue. And then how this can be applied like globally. I mean, you mentioned about Russia, etc. But just look at the US, right? The same country, just different administration. The dynamics are totally different. The sentiments are totally different, right? So SEC, they really pushed hard on, green finance, taxonomy, the types of like green finance regulation, etc. Most of which are now kind of being on hold. We don't know how, new administration will, but I think everyone kind of knows how, things will be handled. So I think it's quite difficult, right? Because it's, I think it will be, just to manage everyone's expectation, I think it will be very difficult this to be like applied like globally, because, some of the countries, green finance is probably not very important because the economy is very small. So this is why I do still think that big like economies like Japan, maybe Russia, I don't know, US or the European leaders, at least there have been a lot of like back and forth and the consultation, etc., to come up with at least some kind of principle, like a framework level guideline that can be easily adoptable. I mean, this is what World Bank has recommended based on what other countries have been like doing and then using their kind of leadership. So ideally, it will be very easy for many countries to adopt if there's a willingness to do this. But again, there has to be a very thorough consultation process amongst all the relevant stakeholders involved.
Yeah. So your question is, what should we do if some countries do not follow the framework? So I think the global partnership is very important for having a standardized, agreed agreements. So corporations, so many different kind of stakeholders should participate in those efforts to frame, to develop the methodologies, consistent and standardized methodologies. Even that, what if even though after that, after this cooperation and partnership, what if they not follow? Then I guess I expect market forces will play out to force them to adopt the global standards or standardized approach and methodologies. If they do not follow global or standardized approach, market will impose, for example, higher interest rate for their bonds, and their asset value will be declining if they not follow those frameworks. So I guess the financial market itself will handle those problems, I guess. So am I too optimistic?
Yes, we do have a question from Dr. Lee over there.
Yeah, thank you very much. It was very interesting, and I learned a lot. And to professors, I think it is shared the very important, the current methodology and also the trends. And I'd like to have a little bit challenging questions. One of the challenging questions is for the future directions. And the first one is, you already mentioned the global standard, but there are global standards, but we don't have one unified global standards. And then now it is getting more difficult situation because of the USD regulatory blitz, right? So here, very latest, I think a couple of days ago, and one of the biggest casualty is Europeans' corporate sustainability directive. And corporate, you already mentioned the corporate sustainability reporting requirement, but last year, for example, July, corporate sustainability due diligence directive was passed. It is very fresh ink. And then even the ink, did not dry up. And we have a new suggestion because of this, the rolling back, the concerns in US actually happening. and then Europe is trying to respond. So one of the things in that corporate sustainability due diligence directive, and it is right now, it requires not only previously direct and indirect supplies both, but now it is only looking for direct. So it doesn't need to be extended to indirect suppliers. So I think definitely that formula is there, but scope of the companies in covering under the coverage of that directive will be changed. So I think there should be some different ways of understanding, and also different ways of the suggestions are expected down the road. So given this very latest change, one reality, USD regulatory blitz, and the other reality, EU is already begin to roll back their regulation for the reporting. So what do you think, some of the key directions to our developing member countries who are here to learn what will be the next things, how we can cooperate? Do we just look at wait, how Europeans are finished their, final response to this, the other side of Atlantic, like United States and some sort of regulatory blitz, deregulatory blitz? Or do you want to suggest, oh, we have to do what we have to do. This may be the one things we have to do. I think that finance, the emissions also definitely affected if these, Europeans, those sustainability directive and roll back the scope of the suppliers. So I just want to learn from, especially Professor Lee, and what do you think what Asian countries, especially developing member countries who are standing on very serious fossil fuel energy-based economy? Thank you.
So quite challenging question, right? So how do you think of it, like, who want to go first? Like, I think probably Dr. Park, you have like, the big picture. You have been working at the GCF, and so I think you could give some answers for that.
Yeah, no, thanks for the question. And also, I think it was a great comment rather than a question that you put forward to provoke really the very active discussions in the room. Again, I just wanted to iterate that we sometimes don't need global standard. I mean I mean it's good to have, but it's more really down to individual jurisdictions' willingness and the leadership. Because things I try to emphasize is that there's a framework level principle, etc., that can be possibly applied across the board. But even what we did in South Korea and elsewhere, every country has a very different economic structure. The different types of stakeholders. Some has oil and gas field, others don't. So this is why it's very important to do this bottom up, so that you can really hear different voices amongst the different stakeholders, etc. But at the end of the day, it boils down to the leadership in each jurisdiction, what they want to do, right? But once there's a willingness, there are a lot of recipes that you can just take advantage of. So that's kind of what I tried doing while I was trying to wear my former GCF hat. I actually introduced PCAF to Korea when I was at the GCF. So that was one of the some of the projects that I launched. And this is what I tried doing, for example, Indonesia as well. I tried to engage with the OJK, the Minister of Finance, at least to make them aware. I mean, this is part of the work that we are trying to do, right? Make people aware, because many countries, oftentimes, especially developing countries, because often they have less resources available. So it's part of I think international community, and that's what the friends at Green Bonds Initiative, etc. That's what they've been doing, make people aware, right? And also just give them all the resources they need. So once there's a willingness, and then of course they will be, I'm sure, more than happy to go out there and do be part of all this consultation, stakeholder engagement meeting, etc. But again, the decisions have to be made at the country level, and the international community's job is to support that. So that will be, I guess, I'm not trying to dodge the question, but I think that's kind of what I personally do believe can be done, and this is why entities out there Green Climate Fund, ADBI, for example, the country should definitely take advantage of their presence and the resources, because they are there to help you.
Great great answer. Any additional comments for that, Dr. Pio?
So your concern is those dramatic shifts in policies, both in Europe and United States, will affect those presented frameworks. Well, in my opinion, for final institutions, without Scope 3 emission has no meaning to measure those kind of finance emissions. So I think so I think the countries in developing countries, my recommendation is to have dual tracks. You should prepare both. So in one track, you should follow. The global warming is inevitable. So the global efforts will be made continuously, I guess, I hope. So you should stay with those trends. But there is a cycle according to, based on some political system. So one track is to follow the global fight against global warming. So you should be prepared for the trend reversal in the futures. And in the other track, I guess, you can make an adjustment based on the current policy directive or policy decisions in developed countries. Yeah. That will be my choice if I work in your countries. Yeah.
Great, yes, so two-track approach, so, okay. And do you have I think we have time for one more questions. If you don't have, oh yeah, you do have a question, yeah. Yes, sure, please.
Okay, my question goes to Dr. Pio. Thank you very much for your insightful and productive presentation. So, considering the nature of credit guarantee, you say contingent liability is not the full liability of a financial institution. So, how did you precisely calculate the impact of these credit guarantee schemes to the GHG emissions? You gave some descriptions, but it was a little bit broad, I think. So,
yeah.
Yeah.
So your question is how we quantify exactly how we come up with the exact number, how much the correct credit guarantee contribute to the companies. So specifically we gather all financial information at the firm level, especially asset and debt profile, how much wicked asset they have when they apply to guarantee. They make applications. So if they have enough wicked asset, like a cash, if firms have bunch of cash, but it is possible they apply for a guarantee. So in that case, I assume that, I posit that credit guarantee company does not big role if they have bunch of financial resources. But if they don't have bunch of financial resources, the credit guarantee companies play a key role. So we map the financial soundness or sound financial health to map into a specific functions. So the function will result in a specific value between 0 and 1. So as it gets to the 1, which means guarantee companies play a big role. If the number goes as it goes to 0, companies play less role in securing loans. So in summary, we use the detailed financial data of the individual from out of their balance sheet. So or we can use the default probability. That's one of the other way we can assign the contribution of guarantee companies. But we took the other way, because we don't have enough data to infer the default probability of individual firm. So indirectly, we quantify those contributions by using, all I can say is we use very detailed financial data of the individual firms. Yeah.
Yeah, he was talking about that. It seems like quite similar to we usually, when we talk about credit guarantee, we say additionalities. That's quite similar concept that you go from 0 to 1. So if it's close to 0, it means that that company has like enough assets, and sometimes like we could say that it doesn't even need guarantee at the moment, however, receiving it. And if it's close, yeah, so it's kind of like a very close to our concept when we say additionality at the credit guarantee. Yeah.
Yeah. Well, thank you for the clarification.
Yeah.
Okay, thank you very much.
Because I heard from the practitioners that for some companies make application, guarantee application, even they have enough funds for their investments or operations, but they make guarantee applications. So we have to, in that case, we have to put small weight of credit guarantee company. That's my rationale. So yeah.
Yes. Thank you. Thank you very much. Oh yes. Last question. Yes.
And it's 0 to 1. I don't want to get into too much technical. There are two ways of additionality we can discuss. One is financial additionality. The other is economic additionality in terms of considering the function of the credit guarantee. But when you focus only for whether we have enough funding sources for the company, it is absolutely right. It can go to 0 and 1. But if you think about specific technology, we say today, the emissions, most of the emissions come from hard-to-abate sector. This hard-to-abate sector has two requirements to decarbonize. One is large upfront investment. Otherwise, it won't happen. Second is it requires a high level of decarbonized technologies, which we do not have a proof of that commitment for the delivery. So in that case, it is more economic additionality, even though the company has money. They don't know it is going to deliver the commitment or not. So today we learned about the concept of ESCO, delivering the energy contract, and for the metropolitan government and things like that. In that case, economic additionality might be different from financial additionality. So I think there is the two different ways we understand.
You point a very important point up. This ideally, in the ideal setting, we can it's better to consider both economic additionality. This is my first time to hear that terminology, and then the financial additionalities. So in an ideal world, we can combine those information into our calculation of finance emissions. But in current situations, the data is very limited, and we deal with thousands, billions of guaranteed products. So it is, I think, you make very good points, but it is almost, from the perspective of operations, it will be impossible to measure for all guaranteed products economic additionalities. It would cost thousands, millions of dollars, I guess. You have to make assessment for every project, how the economic additionality would be. Yeah. For our green projects, we can carry out such kind of economic additionality because I heard that there are not many green investment projects in the KODIT compared to total portfolio. So my suggestion is to, as Dr. Kim, right? Dr. Lim, sorry, but Dr. Lee suggested, yeah. Dr. Lee suggested we can consider for economic additionality at the same time with a financial model for specific green projects. But for all guaranteed products, I think it will be impossible to carry out those kind of calculation, I guess. Yeah.
Yes, we do definitely understand. And Dr. Lee, thank you for pointing out the economic additionality, and it's quite important. We should never ignore the economic additionality part as well. So thank you very much. Thank you again to our speakers and participants for your excellent contribution. This concludes session 5, part 2. See you later.
Thank you to our moderator and panelists for the productive discussion. Now we will have a short coffee break and resume the session at 3:35 p.m. Please enjoy your break and kindly return by 3:35 p.m. Thank you. Ladies and gentlemen, welcome back. I hope you enjoyed your coffee break. We will now resume our conference with session 6 under the theme of Innovating SME Finance through Digital Transition. To lead this session, I would once again like to invite our moderator, Mr. Taeyeon Lee, to the stage. Please give him a big round of applause.
Good afternoon once again. Finally, we're at the last session, yeah, session 6. So, and we don't have to talk about green anymore, yeah. So today we were talking about too much green, but this session is quite different, and we have like very interesting speakers here. So, okay, welcome to session 6, Innovating SME Finance through Digital Transition. As digital transformation accelerates, AI, big data, and digital platforms are dramatically reshaping SME finance as well. New credit evaluation tools, alternative data sources, and fintech partnerships are helping to expand financial access for SMEs. At the same time, these changes raise new regulatory, cybersecurity, and data protection challenges, especially for financial institutions. In this session, we will explore how public and private sector players are navigating these changes and how we can foster a balanced and inclusive digital finance ecosystem that supports SME growth. Our first speaker is Mr. Sung-Kyun Son, General Manager and Head of Global Business at Fintech Center Korea. Mr. Son plays a key role in connecting Korean fintech companies with global opportunities through international cooperation programs. With extensive experience in fintech policy development, global cooperation, and startup support, Mr. Son is also a frequent speaker at global fintech forums where he shares insights on Korea's regulatory sandbox system and the evolving role of digital finance in SME development. Mr. Son, the floor is yours.
Thank you, Mr. Lee. And ladies and gentlemen, I'm very, very pleased to be here. And thank you, KODIT and ADBI and ADB, all members, for organizing this very important mission. As moderator mentioned, I'm Sung-Kyun Son in Fintech Center Korea. I'm in charge of global business in Fintech Center Korea. For those who are not familiar with the Fintech Center Korea, we are a fintech development specialized agency on the Financial Services Commission, which is a financial regulator who makes a policy. And we are the implementing agency that implements financial regulatory sandbox programs and fintech development and startup incubation programs. So I'd like to discuss and share some of the development that Korean government has initiated from the industry perspective. So we'll be more focused on industry development, how we help Korean fintech companies going global and make a partnership with the global partners. I have prepared quite a lot of a presentation, but this will not take all the presentation, but I will briefly go over the key sectors. Okay, I just made a brief implication that Korea and ADBI will foster global partnership in fintech development in the later future run as well. Okay, right. This picture shows that the Korean government has initiated helping partners with the global regulators and government agencies. One of the key roles is that as a fintech center, as a public agency, it is very important to make a partnership with the global partners. Since we are in the public sector, we help Korean government missions going global. Last year, we went to Lithuanian government mission. We went with the Korean companies to make a presentation and share the exchange in the Lithuanian central banks and to understand each market. We went to Singapore FinTech Festival, like a global FinTech event where a lot of FinTech development and discussions are going on. So we help our FinTech companies going global. And some of the EBR delegation from the overseas, they also came to Korea. And when they visit Korea, we guide them and help them tour around our facility as well. And last year, I was happy to participate ADB annual event in Tbilisi. Yes, I took some of the pictures, and then it was very, very meaningful. So ADB and ADBI, I'm very, very happy to meet again the personnel. Okay, I think this year we will be held in Milan in around May, right? Okay, right? So I'm going to discuss about the FinTech Korea trends and how we help Korea FinTech government's policy implementation and some of the key policies the government has initiated and touch upon some cases that will be notable for our audiences here. Okay, I will just briefly touch upon the global FinTech trend there. Right, as you know, FinTech is an acronym for finance and technology, which means that finance and technology are two industry, but many of the FinTech companies that do business, they are not only doing in business in finance, but companies from the ICT sector, with the companies with the AI technology, blockchain technology, cloud computing, and big data. Those technology companies, they want to do business in finance, in FinTech and finance. They also do businesses in FinTech as latest technologies. And because of these latest technologies trend there, a lot of new business models has been developed and diversified because of these AI technologies. Right, as you know, the FinTech is a sector that cross border from the finance and technologies. We, from each sector, categorizes and can be like a neobank, payment, lending, credit, wealth tech, insurtech, digital assets. It's a little different from country to country, but these are the main pillars of the FinTech categories. Okay, let me briefly tell you about the Korea FinTech trend. As a center, it is very important that we understand the market, how many players in the market, and how we help understand the FinTech companies' businesses. So since 2015, we have surveyed about Korea FinTech trend. In that time, we only found that 131 companies were in the present and doing the FinTech-related business. About after 10 years spent, we have noted that we have more than 635 companies that are doing FinTech-related business. These are the companies that made a survey to us that they're in the FinTech-related business. But we know that there are more than 1,000 companies actually we support them and we help them to get into this market. And if you see this sector, FinTech can be categorized into service area and technology area, which means that FinTech enable those technologies such as AI, big data, and cloud computing, and those data-related services. They are in the part of a FinTech enabler, we categorize that. And the big sector is payment sector, which is like a payment-related service providers. They are the major big sector. But as the FinTech business are diversified, we will have more AI-related technologies and using these technologies to make the businesses into more sophisticated and diversified. Insurtech companies, traditionally financial companies, they are the major players in the finance industry, but there are a lot of FinTech companies with AI technology, they come with the Insurtech area. And asset management is another promising area, and cybersecurity, those areas that companies with AI technologies and with the security technologies, they play a very important role. And also digital assets and online bankings, these are also a growing sector in Korea. Right, because of, you have to understand the nature of the financial industry. Financial industry is highly regarded as very complex and very regulated market, as in other industry. Because you know that from the policymakers, they have to make the industry very safe and sound, and also they have to make a balanced view, also promoting these policies that promote the FinTech development and companies be in the present ongoing businesses. So these policy that government has initiated, you may see, I will only touch upon some of the key policies, but the government initiative focused on the helping FinTech companies doing new businesses and financial companies doing new businesses through the financial regulatory sandbox. This is a very important part of government initiative I will touch upon. And open banking and data, public data, those are the tools that a lot of fintech companies and financial companies use this government initiative to make their businesses. And supporting new financial industry, crowdfunding, robo-advisory, and digital assets tier policies, they are also important pillars of government policies. And also, government has an initiative to protect the consumer protection issues by the laying upon more Financial Consumer Protection Act. And AI guidelines, these are very important. And then helping fintech ecosystem better by designating certain agencies like Fintech Center Korea to promote the fintech development and support some of the key programs that as a government implementing agency we do. Right, I will just briefly touch upon the Financial Regulatory Sandbox. I have visited some of the overseas countries and from the Asian countries, and some of the countries, they adopted Financial Regulatory Sandbox. And Korea, as a policymaker, leading policymaker, and very representative country to operate the Financial Regulatory Sandbox, it is a policy that focuses on the new businesses models to be in the market. How they do that? Because the financial market is quite regulated and complex, they cannot allow the license to each company that wants to do business. But they give an exemption for certain businesses that have innovative services. So government make this Financial Regulatory Sandbox policy to allow new businesses to test in the market without the license or without the law restriction. So this policy has been adopted in 2019 April. It has been about 5 years and a half. And a lot of new innovative financial services designation has been designated by the government. About 545 new innovative services has been designated by the government. And about 202 cases, which means that new services that can be tested in the market without the license came in 202 cases. Yes, it is based on the Special Innovation Special Act. Okay, the main key thing is that government make the regulation and also make the balanced view to promote the industry development. So they have to have a balanced view to promote the industry, but as well as to protect the consumers. That's an issue, and also risk management. These are the key government policies that of fintech Financial Regulatory Sandbox. So these are the more detailable. I will stick upon some of the key innovative services that are in the market. For example, we want to buy a very overseas stock, like a Google stock or Amazon stock. They are very expensive, so we cannot buy many of the stocks. But with the fractional share investment for overseas stocks, I can order about fractional share, and then investment companies, they can gather all this fraction of the investment order, and they can buy overseas stock on behalf of us. So with the less money, we can buy these stocks. And also online loan comparison and application platform. Let's say I go to bank to check my interest rate, but you cannot go and have all the consulting time with the bank personnel because it will take time and it will take a lot of energy. But online comparison, you can compare all your interest rate based on the online comparison platform. And other companies like Kakao Pay, ToastPay, and Finda, they make API data from the fintech companies, finance companies. I give my data license to these other fintech companies to compare all these comparison data. And also, I want to buy a big building, but it's very expensive. But how can I buy it? These fintech companies like Casa and Block, they buy the one big nice building or a luxury apartment, and then we can have a share of the beneficiary certificate that these companies issue. So when these let's say price rises, and then we can get a return on this investment. So these makes these new ideas will make the fintech companies do more businesses, and they can be more competitive, but as well as it will be more consumer benefit focused. And I'll say like a music platform, let's say music artists, they have their own music loyalty, but how can they get a loyalty from the in the music industry? So these company called Music Cow, they gather all these artist voices and artist songs, and they connect with the investors like us, so we can invest on this company, and then the benefit of that, it goes investment return to the company as well as the artist. Also, we get also investment rise. And also banks, these financial companies, they have their own networks, a lot of global consumer networks, a lot of consumer supply chain, but they want to use their own consumers' data to make the like a mobile virtual network operator, so they can be using like a telecom operator. Also, like banks, like a Shinhan Bank, they have their own platform where you can order the food in their Shinhan banks through this website. So these are the some examples of some sandbox cases. And new sandbox cases come in the rise in the market. But the thing is that these sandbox cases are tested in the market for 2 years. If they are good in 2 years, they can be extended another 2 years for the operation without the license. That will make the validation period, and we can review that this is service and technology are safe in the market. Okay. As a FinTech Center Korea, we do a lot of activities to help FinTech development in Korea. We are founded in 2018 as a nonprofit organization under Financial Commission. We have a lot of members from the financial industry and KODIT and other agencies that support our funding programs. This picture shows that what we do is that we do programs to help make the FinTech companies doing business in Korea. So one of the things is that we help them have incubation program. It's very important that because you have to understand the nature of FinTech companies. Because of FinTech companies, although they have a technology and services, but they are like startups. They only have a very technologies. But the thing is that they cannot survive without the government support or without the investors from the outside. So we make these some kind of programs to tailor-make to meet the company's needs, such as helping them incubate in our office. And we help these FinTech companies testing their cybersecurity program and helping them understand their upgrading their security or paying them insurance for this testing bed or the security check. And we help a lot of acceleration program for FinTech companies doing business in Korea, and also help them to going abroad as well. And education programs, some of the mentoring programs for FinTech personnel. So these programs that we think that they're important because they are specifically help the FinTech startups' needs in the market industry. So as a FinTech Center Korea, we connect the bridge. We work as a FinTech hub to connect the bridge between the overseas and relevant agencies, hear the industry voices and partnership, and help them doing business in Korea. I'd like to mention one big program that our center initiated the last 5 or 6 years, which is a Korea FinTech Week. We hold this event each year. Last year we held this event in August, but August was a very summertime. So we are planning to hold this event in the end of November, which is a good time for holding a lot of seminars and a lot of good events. And here we invite the global speakers and other key players. And this is where a lot of fintech showcases are shared. A lot of new services and seminars are going on in this event. So I'd like to maybe suggest sometime in the later half of the year, if you're able, you may join Korea FinTech Week in the end of November. I'll be happy to extend our offer to you. Okay, right. These programs that I mentioned are for the Korean fintech companies going global, but also there are other agencies that help to come when they come to Korea. They can get help from the Korean government agencies, such as the Financial Service Commission, Supervisory Services, and they have FinHub, which is a platform for helping overseas companies and learn about the license issues, how to apply, set up the business in Korea. And then some of the metropolitan government agencies, Seoul Financial Hub and Busan Finance Center, where they want to invest, they want to attract the foreign companies and doing businesses. And Invest Korea and Invest Seoul, they are some agencies that focused on helping investment from the outside. Okay. We reach out to overseas partners such as Global FinTech Association and relevant agencies to sign the MOUs, and as well as reaching out to other partners understand each market. And we have a delegation from the overseas as well. Okay, I hope that I couldn't have a lot of time to share this presentation in detail, but we will have more question answers through the networks. I hope you understand about how Korean government initiated FinTech Center's role in helping understanding overseas market as well as partnership through our center. Thank you, ladies and gentlemen.
Okay, thank you very much, Mr. Son, for your insightful presentation. It was great to hear how FinTech Center Korea is supporting FinTech innovation and helping startups expand globally. So we heard from the a public side story how we are approaching the digital transition. So this time our second speaker is Mr. Min-jun Kim, CEO of LandCode, an AI solutions provider specializing in generative AI agent technology for enterprises. Under Mr. Kim's leadership, LandCode has successfully partnered with global companies, including Mercedes-Benz, LVMH, and Samsung Heavy Industries, to deploy AI-powered solutions that enhance customer engagement and operational efficiency. LandCode has also worked closely with major Korean financial institutions, applying AI and big data solutions to improve credit evaluation and risk management processes. Yesterday, we talked a lot about, I think Jeff kind of introduced the first Penguin, which is our signature startup supporting scheme. And actually, LandCode's rapid growth was supported by KODIT's first Penguin guarantee program, and the company continues to work with KODIT on AI-driven financial innovation initiatives. So, Mr. Kim, please go ahead. The floor is yours.
Thank you, and I'm really glad to here to get an opportunity to introduce our companies and how we made some success stories on finance and other industries adopting agentic AIs. So I cover some disruptive AI technology cases and in some focus on SME finance, but I also cover some general cases for your understanding of how AI can transform the industries. So LandCode, our vision is to democratize AI. So which means that like computer, PC, we always use PC and smartphones, but in some days the computer was mainframe, so one huge mainframe in just one building. But now we have a bunch of computers in now, so AI could be followed that way of distribution and democratization, we believe. So as our moderator said, we are one of the rapid growing B2B AI startup in Korea and also selected as a first penguin startup, and we've received also credit guarantee, but also received other supports like CES exhibition with KODIT and so on. So not only in Korea, we also have some successful cases with European clients like Mercedes-Benz, LVMH, and others. And we are also trying to comply with in Korean and also European AI Act and GDPR regulations. So this is a brief overview of how we cooperate with these clients to transform industries in manufacture, finance, retail, and even more industries. This is our history. So I focus on the generative AI. So we already know that in this era, AI doesn't only mean the generative AI, but I focus on the generative AI because this is the most disruptive technology. So AI itself is very disruptive, that changing everything in industries, but generative AI is one technology that disrupts AI tech ecosystem. So double disruptive maybe. So I'll show how the impact and transition is happening in various industries due to generative AI. So while there are many investment and demands are rising massively, but only the 10% of enterprises are in the production stage of generative AI. So the investment is exploding, growing spree, but they are facing challenges. Many challenges, but there could be two major problems. So first one is that using just ChatGPT is not an option for industry-specific tasks. So I guess you might have used ChatGPT or tried ChatGPT for some entertainment or maybe some your ordinary tasks. But yeah, for some cases, you might have great and excellent result. But I believe that for many cases, for your industry-specific or organization-specific tasks, it could be very disappointing because there is complex and dynamic business process, and also it involves millions of fragmented data and documents. So to handle this, the model or ChatGPT itself is not sufficient. You need some specialized AI solution or AI platform to handle that. But existing solution is not so fast, safe, and scalable for enterprises. And not only for enterprises, but even for very small or medium-sized businesses, when it involves finance or fiscal data, the scalability and safe measure is also raised high as enterprises. So to promote the adoption of generative AI beyond simple consumption, we expect AI for domain-specific question answering and task automation, like generating a whole report for credit evaluation or technology evaluation, and data documents. It need to handle existing data without any pre-processing, and after that, scalability means that anyone, not only for IT personnel or AI experts, but all the employees, all the directors, or all the people can build, deploy, and manage AI agent for real tasks. And surely, every data should be monitored and following the guidance and governance for the act and also internal policies. So while we have many challenges, application is very rich. So from data to experience, I mean that you can expect with AI that personalized question answering and recommendation and automation like report generation and real-time data sync to provide you real-time data analysis and proactive suggestion for incidents. And also omni-channel means you can use AI for any channel like web, mobile, even in your work system or messenger. So core technology, I'll skip for some technical details, but I want to highlight that there is not only, there is something beyond models. So GPT or Gemini, Llama or DeepSeek, yeah, they are very important, but model itself is not sufficient to handle very domain-specific tasks. You need some technologies or you need platforms that support those type of technologies and implement those requirements. So model is a very critical part, but it's fundamental one. You need definitely more cases. So to handle them, there could be some processes, but I want to highlight that there is a cycle manner. So you need to ideate what to begin with your AI adoption journey, and you need to prioritize what should be implemented and what should be handled, and you should allocate resources and appropriate teams to handle those iterative cycles, and you need to design, and everything could be iterated. So key to success is you always have to think about the outcome in business manner. So the two things should be balanced, the technical feasibility and business outcome. So let's say that the ideal one is that the case that can expect many business outcomes, but it's very technically feasible one. So it's either one, but if you have to select between those two types, and you should prioritize business value. And next, for technical one, I finally highlight the concept of AI agent, because AI agent doesn't mean just question answering chatbot, but agent means it can handle tasks and it can do some actions on behalf of users. So not just saying that, okay, your interest rates can be adjusted if you send some documents, like this type of chatbot is already existing, but most good thing, better thing would be that, hey, I already analyzed your company's data, recent data, and I found out that you have some opportunity to say, I want my interest rate should be lower according to our recent successes. So I've made a report, I've made all the reviews, I prepared all the materials to send to your bank, and just you can just check yes if it's possible. Yeah. So not only saying the knowledge, but leveraging the knowledge and do the action. And this is what agent means. So with this agent concept, democratization of AI can be possible across all the business units, all the industries, and all the domains. So firstly, I'll share some industry use cases first, and I'll cover for some financial specific cases. So with Mercedes-Benz, we've automated some very technical question answering. So before using AI, they spent on average of 1.5 hours, but after using AI, it became 10 seconds. So you just type the question, and our AI will immediately answer the question with historical knowledge and history of those chat, and also internal knowledge of Mercedes-Benz. For this project, AI just utilized the existing data, so there is no need to process and edit all the existing data, but just connecting and uploading data was enough to implement those type of chatbot. And with Chanel, they have a huge concern about compliancy and also some private information protection. And also, they need very hyper-personalization, which means if I ask very simple HR question like the policy for vacation and so on, the answer should be different for each employee, because each employee is under the different policies, different regulation according to their position or geography and so on. So personalized answers for each individual, and also ensuring that all the personal, private, or sensitive information should be monitored and redacted if required. We followed the reviews and succeeded to provide AI feature for response security. And this is some case from manufacturer side. So Changshin INC is one of the largest OEM of Nike in Korea, and they have many factories in Korea and Indonesia and so on. And when they had to inspect some issues in Nike sneakers, like rubber or like stitching issues, they spent 4 hours. So searching through emails and documents and many meeting logs. But after using our solution, they spent just 1 minute to investigate an issue. So likewise, let's say I want to know how many rubber bonding issues happened for Nike Jordan Air model. Then I can ask to our AI. Then our AI will show this data visualization and the immediate insight for my question. So this is some key outcomes for industry, from generative AI adoption in industry. So human level accuracies in bench, and also just in 8 weeks, Samsung Heavy Industries automated 14 tasks with 93% user satisfaction. And KT, Korea Telecom, deployed 25 AI agents for their 20,000 employees in just 6 weeks. And for Nongyeok Bank, we are one of the first sandbox permitted cases in generative AI for banks, and we passed all the 50 criteria of report quality. So this is some overview of how AI can transform the industry and how the impact could be huge and very significant for cases. And for now, I reviewed some more things in finance area. So the first one to introduce is venture capital or startup ecosystem. So Premier Partners is actually one of our investors, and those startup investors have some very huge burden for writing on the quarterly report for the startup portfolio companies for their operating funds. So for a single fund, there are 30 or 40 companies like Rancode in their fund, and just one employee of their VC handle those all the companies' quarterly report. So when you write this report, you need to aggregate all the fiscal or all the financial data from each individual companies, and sadly, every company has very different way and different format of reporting their fiscal numbers. So it takes many times, but it's very consuming and exhaustive works. And also, not only for the numbers may be exhaustive, but you can handle it. But more complex thing is some like business cases. For this report, you need to cover not only for the fiscal numbers, but also for some condition or status of companies. Let's say, okay, Rancode is coming to the Europe with MWC and so on. So this type of information is very unstructured, and you need to hear or interview, or you will get some email from those companies, and you need to manipulate and refine all the information for the required templates and report. So this thing is very time consuming. So what he did was automating everything. So it's not just illustrative example, but it's what really did with Premier Partners, that you will dump all the files and all the informations and all the emails to our solution without any manipulation. And AI will analyze all the data and extract required information from all those unstructured files, and it will create just a completed version of report. So report with the contents and also following the template or required report template. So before using this, it would take about 1 or maybe and that's 3 days in a total, but it became just 3 minutes, just asking, okay, please write a report for this quarter. That was enough. Okay, and also we did many projects with NH Nongyeok Bank. So as I said, this is one of the first cases in production level of generative AI in bank in Korea. And what he did was to ensure that enhancing employee productivity through the implementation of AI chatbots. So there are many manuals, documents, and many articles regarding some how to operate those IT systems and how to handle some customer cases and so on. And those manuals and some policies are ever changing. So one answer from the yesterday could be wrong answer of today. So to follow up with those changes and updates, AI is required, and we provide real-time answer based on the documents and policies, and yeah, so on. And other one is to, I want to highlight that, and also it has some more relevance with some work with Korea Credit Guarantee Fund, because this is related to evaluation of startup or tech companies. So there is some called TCB report, and this is some credit and either, this is some evaluation report for either credit and technology for a specific company. So you need very bunch of many raw data from companies, like how the CEO's history was and what is the market and market is growing or not, or what is their patent and what is their core technologies and so on. So it involves 33 sections for a single report, and each expert should write all that 33 sections for a very single and very small, even for small size companies. So what it did was very like to premium partners. We've 100% automated all the report writing processes for 33 sections with our solution. So what the NH 농협 Bank's employee does is just log into their internal tech systems and just find the request AI button and click it. And after click it, he or she can enjoy the coffee time, and everything is done in 5 or 10 minutes. After that, he or she will see the completed version of 33 section report and review it, and if he or she has some comments, add it and confirm it. That's all. So they spend at least 4 hours for a report, but for now they spend, including the coffee break, it's about 20 minutes or so. And also we also cooperate with the 농협 Bank for anti-money laundering domains. So there is some suspicious transaction and cases reported from the each bank branch. And what they did with their department for monitoring AML was to automate some report writing for suspicious cases. So human will judge and evaluate what is the type of the suspicious activity and evaluate it. But after they decide, okay, this should be some money laundering cases, or this is involved with some virtual things, then it will show the completed report for insisting that this transaction cases is very suspicious because blah, blah, blah things. So it is also one of the fully automated report implementation. And also with insurance company, it's not very related to some evaluation of companies or credit, but it is some kind of evaluation, so underwriting problems. So for certain cases, you need to find out what policies and what manuals or what documents to apply for specific incidents. But our AI helped their employees to identify their intentions, extract keywords, verify disease names, and generate response to share them. And also, we have another bank cases, IBK, Industrial Bank of Korea. So we developed some automated question answering chatbot for financial bank operation manual. So as I said, so for the bankers, they are facing very ever-changing policies and documents. So, and also, if I go to bank and ask something very complex or very rare things, the banker should call HQ, and I need to wait 30 minutes and 1 hour. But with our chatbot, it became just 10 seconds. So this was some brief overview of how industry and finance industry is changed due to the adoption of generative AI. And feel free to ask some questions or keep in touch for if you want to know more about impact of generative AI. Thank you.
Oh, I was kind of like surprised and very interesting, right? Because the presentation was quite different from the other presentations because we are listening some real stories from the startup which is doing business right now. And I'm so proud that you are one of our first penguin company, startup companies. Good, thank you very much. And one more thing that I just thought was that I heard that Mr. Kim actually should have this week is the MWC week, am I right? It's kind of Mobile World Congress, and actually Rancode should be at Barcelona, but he gave up Barcelona and came to this workshop. So another big round of applause for Mr. Kim. So now we heard from the public side and private side, and now it's time to share some stories about KODIT, or financial institutions. So our final speaker is Ms. Seung-yeon Lee, Deputy Director at KODIT's Big Data Business Department. And Ms. Lee has built her career at KODIT working on SME financial support programs and driving data-driven innovation within the organization. She has played a central role in the development of BASA. BASA stands for Business Analytics System on AI, KODIT's AI-powered credit evaluation platform that integrates big data analysis to provide more accurate and timely assessments of SME creditworthiness. So, big round of applause for Ms. Lee.
Well, thank you. As a deputy director at Big Data Department, I'm working on developing data-driven solutions for SMEs. Let me start by saying it's an honor to be on here with ADBI and with distinguished panels. And I really look forward to discuss this important topic for SMEs. I'd like to share one of our key digital transformation cases, which is Business Analytics System on AI. In the financial sector, capital allocation is often imbalanced. One major cause is information asymmetry. Unlike large corporations with extensive data disclosures, SMEs often struggle to provide adequate data to the market and obtain important information from the market, which is leading to adverse selection. Meanwhile, our organization has accumulated a vast database of over 1.4 million enterprises and 600,000 credit assessment cases, mostly from SMEs. However, the data had been used only for internally. So as part of our digital transformation strategy and based on our data infrastructure, we developed a solution that provides real-time analysis and AI-driven insights to SMEs. This background has led to the launch of BASA, Business Analytics System on AI. So let me introduce BASA as a data solution for SMEs. BASA is more than just a solution using open databases. It is the integration of our in-depth expertise and insights. At the core of BASA is a key insight, the enterprise's current status in its industry. BASA evaluates enterprises' grade from 1 to 10, which is calculated by using both financial and non-financial evaluation models. It also highlights weaknesses and strengths of the enterprises, offering AI-driven suggestions to help business improve. For example, if a manufacturing company has strong financial stability but a slow payment cycle with suppliers, BASA would recommend optimizing cash flow by renegotiating the contracts more favorably to improve cash flow efficiently. For another example, if a retail store has high customer traffic but low conversion rates, BASA would suggest retail price adjustment or targeted marketing strategies to increase sales. BASA also analyzes business transaction networks. Since chain reactions like chain bankruptcy can be highly disruptive in the business, it evaluates risk from not only primary partners, but also from the secondary ones. So it enables enterprises to make informed decisions about when and with whom to continue or discontinue their business partnerships. And all of this happens with one click. The full diagnostic report is generated within 30 minutes. BASA also offers specialized solutions for smaller enterprises like retail stores, restaurants, and cafes. For smaller enterprises, it collects additional data from mobile communication company and credit card companies to analyze their business location or customer preferences. For example, let's say there is a bistro facing a decline in sales. BASA analyzes key factors and identifies mismatches from the industry trends. As you can see in the table on the right-hand side, the retail price of the bistro A is lower than the average, but the price is not an issue. The real issue lies in customer preferences. It is lower than the average, which means the number of credit card use and mobile activities in the area has been reduced. So in this way, BASA detects a decline in foot traffic in the area near the bistro. It might suggest expanding the delivery service further to reach more customers outside. By offering these kinds of customized AI-driven solutions, it helps SMEs adapt to their unique circumstances and make strategic decisions. Now let's see BASA in action. You can access our platform at www.basadata.com on your smartphone or laptop or any other devices. The first service I'd like to introduce is business diagnosis based on AI. Basically, it integrates the data solutions I discussed earlier. It helps enterprises discover their competitiveness in an objective manner. It is available at any time for any enterprises, and the most important thing is it's completely free. We see this service as a regular checkup for enterprises. By detecting risk earlier, enterprises can stay in good condition so that the number of business closures can be reduced. On a larger scale, we believe this service contribute to a healthier business ecosystem and a strong economic stability. And another service is business analysis report. This service allows enterprises to see other businesses' BASA reports. It can help them to check potential risk, especially when they're considering new business partners. And they can use it for benchmarking other successful companies in their industries. They can search by company's name, or they can use advanced filters such as BASA ratings, business locations, and industry type. So enterprises can look up for their potential partners who run related business and have better BASA ratings and located nearby. And the third service is business statistics. It provides up-to-date industry-wide statistical data from the BASA database. So enterprises and any institutions can use it for their research. What BASA sets apart from the other services like statistical services is the frequent cycle of update. Unlike traditional services, BASA is updated on a monthly or quarterly basis. It combines multiple data sources from public institutions like National Tax Agency or Employment Agency so that BASA could create complex indicators and suggest deeper insights into the industry trends. And lastly, we have business performance analysis system. It is designed for local governments and public institutions that support SMEs. Local policymakers have long requested for a simple way to identify enterprises' qualification for their policies or evaluate the cost effectiveness analysis of their policies, because it's hard to collect all the data properly and timely. So they can rely on our service without the hassle of additional effort. All they need is the business license numbers of the SMEs they support. By entering these numbers into our platform, they can track changes in financial performances, such as sales figures, net incomes, and capital increase. And they can see whether these SMEs have expanded their workforce, which is critical to local economy. We launched this service just 3 months ago, and it has already gained significant attention. Local governments and public institutions can measure the real impact of their support programs and refine their programs for supporting more SMEs effectively. And even some of the conglomerates in Korea have shown interest in this service. They are financing SMEs for the purpose of penetrating into the new market in collaboration with our organization, so they can easily see the outcome of how their cooperative SMEs have grown from the programs from the BASA platform. Over the last 2 years, enterprises and institutions have been used all these BASA services for more than 400,000 times. It means more than 500 enterprises and institutions have searched others or have been searched by the others every day. And in the world of digital finance, our organization has expanded data solutions and provided alternative evaluation models to complement traditional ones. One of the solutions is an evaluation model for e-commerce business. It analyzes business activity indicators such as the number of customers making purchase and repurchases and the frequency of customer complaints or good reviews on e-commerce services. Those indicators come from 5 categories, including growth potential, product competitiveness, marketability, stability, and use of platform. Through this, it evaluates an e-commerce enterprise's competitiveness. In collaboration with a leading tech company and a major bank in Korea, SMEs can apply for credit guaranteed loans directly through e-commerce platform, and they can receive funding from the bank right away. Another solution we provide is a commercial payment index. The index is calculated using alternative data sources, including payment cycles, employment growth, and value-added tax amounts. Those data turn into 5 categories, such as payment security, job security, sales growth potential, reliability of business partners, and payment capacity. It allows SMEs to access financing timely based on their real-time business performance records rather than waiting for outdated financial statement. It takes about only 10 minutes to get the index, and thanks to the solution, more than 3,000 companies have been used credit guarantees more conveniently over the last 2 years. We KODIT believe that data-driven solutions can empower SMEs. Through BASA, we aim to provide practical, affordable, and impactful solutions to help business survive in a digital environment. I appreciate the opportunity to share this with you, and I look forward to continued discussion. Thank you.
Thank you, Ms. Lee, for your clear and informative presentation on KODIT's digital transformation journey. I didn't know that the local governments and some of the large enterprises are showing interest in our, it's kind of like a new one, right? The fourth one that you introduced recently, they just launched the scheme for the local government officers and whoever who needs the service. So now I think the tables are ready, and today, this session, we're kind of like going fast, so I think we'll have a discussion for like 15 to 20 minutes and try to hurry up to finish this workshop. So let's invite the speakers to the stage, please. So once again, on the right side, we have Ms. Lee from KODIT, and we have Mr. Kim from the private sector, the startup, and we have Mr. Son from the public sector. So, okay, now I'll open. Okay, automatically goes to you. Yeah, I was like, yeah. So, Dr. Yoshino.
Thank you very much. Very interesting presentations. I would like to ask each of you. First one is about FinTech Center Korea. Cyber security is very important. And if you let each company to protect against cyber security, it is very costly and not so be successful. Are you providing some kind of a program or method for them to prepare for cyber security?
Right. That is a very important question, and thank you that you asked the question. Right. Fintech companies, they lack of a lot of resources, actually. So as a public agency, we support fintech companies upgrading their cybersecurity capabilities. How we do that? We receive some kind of budget. It's official government budget to match right agency, such as Korea Security Agency and or other agencies to upgrade fintech companies' cybersecurity preparedness capabilities. We do not directly test their security measures, but we connect with the right companies or right government agencies to with the right capability schemes. Right.
Thank you very much. Next question is to Mr. Kim. Lang Code is a very successful company. I'm sure there are many fintech companies. Why you think your company was very successful compared to others? What was the reason why you are doing very well?
Yeah, for my perspective, I think we have reached some early stage of success due to some current success cases. So there are many fintech or some AI technology companies out there, and yeah, they are also promising. But we think that technology itself is meaningless. Technology and some success client cases or technology plus industry, this pair make some values. So technology alone can't make value. This is our vision and perspective. And for Rancode, as in the early stage of Rancode, 2021 or 2022, we have some opportunity to get some open innovation program is Mercedes-Benz or other many Korean Korean enterprises. So through the open innovation, we've made some initial success, and the initial success becomes some fundamental ones to make some flywheel to get some growth cycle. So in short, so the technology should meet the success cases, and for acquiring success cases as a startup, yeah, we think open innovation will play a big role for our success.
And Ms. Lee, BASA is doing very well right now, but are these data connected with the tax authority? Then in Japan, many SMEs do not want to show their actual data if the data is seen by the tax authority. So in Japanese case, when we collect data, we are not reporting it to tax authority. So what is the situation in Korea? Then how much percent of MSMEs under the credit guarantee system will be joining this BASA? Almost 100% of the companies, or about 50% who provide those data set?
Okay. for the first question, we collect data from the government agencies. We do not send the data for them. That's the difference.
So that means the tax authority knows those data.
I guess.
I see.
The reason we gain data from them is because we have to evaluate, and those data uses as indicators for the evaluation models.
So that is very different from Japan and Korea. In Japan, SMEs has two different accounts. One is showing to tax authority. Another one is his own account. Yeah, but in Korea's case, it's very transparent.
Well, I thought it was 3. You usually say it's 3, one for the wife. Don't you like make some jokes like that? You always like make 4 accounts. Okay, I'm sorry bothering you. I think, but yeah, I think she has to answer your second question, right?
And for we don't have exact percentage of how many SMEs in our nations have used our bazaar services, but I can say over 500,000 SMEs have been used this service.
Sure, please.
Thank you. Presentation was very, very, very useful. And I want to just add questions to Dr. Yoshino. I think for system BASA, the most important thing is data collection to make and to analyze it. So I just assumed KODIT is also not a kind of financial institution. So I think you may have a data of historic data of your clients. But to make this system effective, maybe you need many companies' data updated at real time. But how do you have a data of a company who are not your clients as well? Where can you get the data? And how do you update it? Yeah.
We have other companies which is not our clients. We get the data from them through mutual agreement on other financial institutions.
Yes, I think we have one question from here.
I have a question for Mr. Kim at the line code. I think to me personally, your model solutions seems fascinating. I think it seems revolutionary for me. But my question is somewhat fundamental. To what degree can the large language model of AI-based model can replace human qualitative judgments? So, as far as I know, the AI-based portfolio investment management tool is not quite successful. Global advisors, for example. But do you think that those models based on a large language model can replace qualitative judgments, for example, in terms of, as we discussed, the economic additionalities assessment made in KODIT? So do you think those processes can be replaced by the automated large language model solution like your models, your services?
So for that scope, I think there is 2 aspects. So the first aspect is not technology one, but more some ethical or business one. And the second one is some limitation of technology. So for the first aspect, let's assume that the technology is 100% perfect and AI can do everything that human can do, but there is some limitation. Even for that, there are limitations. Like for some ethical reasons, AI alone can't judge or decide to give some limitation of credit guarantees or some initiate loan or not. So this should be monitored and finally decided by human employees who is very responsible. So in ethical terms, and also some things like very strategic decision, like for example, should Rancode go to Japan or go to European markets, or what should we prioritize? Yes, AI could give some opinions and suggestions, but the final decision could be handled by human employees. So this is the first aspect. And for the second aspect, technical limitation, there is many restriction and limitations. So what we do is to suggest some multiple options. So for the example of 농협 Bank in AML, anti-money laundering, actually we've made 2 chatbots in different persona. So one is 강경이, which is some very strong and some hawk persona, and one is 온건이, which is some weak and some very friendly and familiar one. So for the single incident, the pessimistic one and optimistic one will provide different answers, and these different opinions can help human decide what is the best answer for the situation. So AI will not judge the event itself, but AI will help human evaluate the situation and make right decision in some short time. So this is what our approach, and maybe you can inference from my answer that AI can't replace all the strategic and all the some critical decision itself, but we can support, AI can support data-driven decision, because naturally AI is much capable on handling large data in very short time. So this is inherently human has some limitation in physical manner. So what our vision is, make some data heavy and data volume centric works for AI, and do the opinionated decision for the human. So this is what I think the optimal strategies regarding either 2 aspects, like ethical one and technical limitation.
Thank you. And yeah, please go ahead.
Thank you very much for your eyes-opening presentations. I'm Zol from ADBI. My question also for Mr. Kim. So you share a lot about the usefulness and the nature of distractions of the AI. And today, in the 2 days of our discussion, it's the main actor is the small and medium business. So I would like to know, and you also shared the existing platform are, they might not be safe, and they might not be very specific, might not be useful for industry-specific tasks. So in that case, how it is feasible to use for small and medium business these services? And in your clients, is there any small medium business in the current situations? And for the second questions, the nature of AI, as I understand, it can be very energy intensive. It consumes a large amount of energy when training large models and also keeping data centers. So, and at the same time, we are also discussing how to reduce the carbon footprint, the GHG emissions. So how can we mitigate these 2 contradict situations at this point?
I think those 2 questions are showing very good point. And for the first question, actually, frankly speaking, our solutions pricing strategies are a little bit, maybe not a little bit, a bit high for small medium SMBs, actually. But but we do have some, let's say, four SMB and startup use cases in some and some limited use cases for analyzing some specific data or helping some writing some specific report or specific articles. But I think there could be some high-low mix approach. So let's say ChatGPT or some more accessible tools like Microsoft Copilot or other things. Yeah, they are about monthly for $20 or $30. It's very reasonable and accessible from SMBs. And for SMBs, yes, we are also SMB, and we already know that even for SMB, the strategic decision is always challenging as enterprises, but in a practical manner, many decisions does not involve many data. So for SMB, data is reasonably small, so you can use some more accessible Copilot or ChatGPT or so on. And as your company, as the SMB grows and scales, the data will scale, then maybe our solution, some more expensive one, could make some reasonability. And that is one we are doing. And this is some temporary one. You know, our vision is democratization of AI, and democratization means that our AI could be adopted by SMBs. So there is gap in practical and engineering manner, but we are trying to minimize the gap with our growth and also advance in technology. And that is also why we are cooperating with Microsoft in Korea and Europe in global manner to help SMBs promote Copilot and more accessible things, and also suggest some other ways of advanced use cases of AI with our solution. And answering for the second question, yes, that is very important. And our European clients are always saying, "Are you green?" Okay, I hope you are green. So, yeah, but on some technical details, but training LLM requires massive cost and time, and massive time and cost always goes to the massive CO2 emission and so on. And the DeepSeek has some critical impact to AI ecosystem because it seems to be they had less time and cost and naturally less CO2 for the training, but training the large language model itself is always heavy, and CO2 emission is very large for using all the GPUs and the huge amount of electricity and also huge amount of water due to cooling the GPUs and so on. But our approach is to minimize or avoiding the training of LLM itself. So not training the LLM, but we are using model as frozen one, just as frozen one, and we try to adjust the prompt and instruction to model. So by doing so, yes, we do use some sort of GPU because inferencing itself already use GPUs, but compared to training, inference is very less exhaustive, and for the statistics, I remember that it's about 100 times efficient for that compared to training. So we want to contribute as a startup. Also, we want to contribute some green initiatives by minimizing the training of LLM and utilizing more time, cost, and also environmentally efficient method to implement the AI agent.
Wow, yeah, I think Mr. Ablan raised his hands like 10 minutes ago. Yeah, please.
Thank you. This is for Ms. Lee. We're very impressed with the BASA application. We're wondering how it was developed. Was it developed internally within KODIT, or did you partner with a company like Langgrove?
Of course, we have been partnered with other coding company to get the program.
Okay. And then it was transferred to KODIT, and then
It transferred into our platform.
yes. All right. And then very similar to the earlier question regarding the data. Many of the data that may be used in BASA is we also have available for our SMEs. However, many of that data is kept in print. It has not been encoded. Was that a problem for KODIT? Did you have to encode from print to data in order to have the database? That's a problem in the Philippines. It has not been encoded yet.
The way we provide data is through connected network, through the internet. So it is not printed into the paper. So it is encoded automatically.
The source where it came from has maybe in Korea you've had the data for a long time. in computer, but in many developing countries, especially prior to 2010, I would say many of our data is really still on paper. We still have to encode. I don't know if you've used some kind of AI to scan all of the documents and then convert it into your database.
Unfortunately, we don't have such great AI scan data. We have to, if we have some kind of data printed on paper, we have to put it on our platform by our hands.
Yeah.
I think it's a little bit related to the yesterday's session that we do direct guarantee. So we do every time we do the credit assessment, and usually most of the data come in as like online. And even if some of the SME data did not come in online, we usually put it in the web during our when we do the credit guarantee assessment. We have to put it in our computer. So that's the data that we are using.
You've already amassed all of that data.
Yeah,
that
for
you
the
have
long
enough.
time ago things maybe, but we started this kind of procedure like 20 or 30 years ago. So that's why we have the data. We are using those kind of data.
My last one is just a comment, very similar to Professor Yoshino's comment on the SMEs that are on board BASA. Very similar to Japan in the Philippines. SMEs will not report everything to government because they fear that the tax authority will see it and they will know the real income. So that's why you're very lucky here in Korea that businesses are very honest, that they're not scared that the data will be seen by the taxing authority, because in the Philippines they will also be scared. They don't want to. They will underreport when it's going to the tax authority.
So it is true. So if we don't have any more questions, I think we do have. Yes, please. Yeah, we do have.
For Ms. Kim, so this is regarding the credit assessment, right? So I think you mentioned about the alternative data. So I just want to know, on the weight of alternative data as compared to the financial data, does it, just take off all the financial data, and you can rely on the alternative data to assess on MSME creditworthiness? Thank you.
We try to make alternative solutions that make less importance on financial data. However, it's not easy to ignore financial data because it shows what the company it is. So it's complicated, but we are trying to make alternatives to see other importance on non-financial data.
What if there is no historical record on financial data? So can you rely purely on the non-financial data, like the electrical bills or mobile transactions, as part of your assessment entirely without the financial?
We have.
Because the reason why I'm asking, like in Malaysia, and they adopt a similar score system from Korea also. They call it SME Competitiveness Enhancement Rating, but it's not in the form of AI. But what they do is basically the banks still consider the financial and also the non-financial, but only certain banks. So it doesn't apply to all, because I think the reliability of the non-financials and the weight in terms of the assessments. So that is the reason. So I just want to know whether, if in the case of Korea, you can rely on the non-financial data and then can be part of the, a higher kind of like weightage for the non-financial. Thank you.
For the question I think I would make my thoughts and let you know the details. Okay.
Okay. Yes, please.
Simple question. So does BASA have data on the small medium enterprise for in KODIT, or it's based on small SME enterprises?
Yes, you can see the report of KODIT in BASA.
So isn't confidential? I thought it was a confidential one, but you just disclose all SMEs information. So that's my question there. I was wondering how you can disclose the SMEs financial or non-financial informations. Well, I'm sure you're gonna mask the name of the companies, but you disclose all the financial informations of small, medium companies that your firm supported, provide guarantees.
So as we are public institutions, we have audit and we make financial statement and.
No, I mean the companies of who got guarantees.
Yeah. I mean, the business diagnostic report, the company that this SME wants to learn about his company, it has much more information. The business review that, like for other SMEs reviewing other SMEs, the confidential things are all not inside the report. So
it is the business analysis based on small SMEs. You KODIT support.
Yes, all the KODIT support and some of the information we
external
get from outside.
SME. Okay. So you combine.
Like for the confidential issue, we try to keep it so.
But you guys you combine those internal firm
and
data
external
and
data together.
External firm data
together, and the AI makes it like a report, so you can understand like that. Oh yes, we do have another question. Yes.
Actually, it is related to the same one to the Mr. Kim, that when you are uploading the company's data to AI, that platform, as that same like that, I'm wondering whether how we can protect the privacy of that data, because that when we are using the normal platform as for example ChatGPT, so he or she go search all the things and give me an answer. That means which are available. Same like that your platform, those are available for anyone or only for your platform, because that you are entering that. For example, if my company, I enter my employee data, all the data. Then he analyze the things and give me the answer. That's okay. But the thing is, if other one or other company or any other person, third party, could access that data and get that data, that means I'm violating my employee privacy, and that would. So, do you have any kind of protection things, or what kind of things you have in this regard?
Yes, definitely. That's very important. One, for using our solution for some confidential and some strictly limited information. So basically, our approach is deploy our solution into our client's infrastructure. So not our server or not our cloud, but Bench cloud or Chanel's cloud, Nongyak Bank's cloud. So basically, they have full control of all the databases and infrastructure. And for the production level, it's like some double blind. So even Rancode can't access to their data or some usage of AI because it's so limited. And even us should request some access permission for the certain issues. So that's how we protect data for the enterprises. And for SMEs, it's not very practical to apply all these practices. So unless we have a plan to provide some logical isolation for all those data. So maybe we can share some infrastructure resources, but on some software manner, only the client A can see the data and interact with data from A. And just adding one comment, some companies also set higher requirements. So let's say company A can see company A's data, but even in the company A, employee A could access to department A's data, and employee B should and must have only for the Department B's data. So even in some same organization, data access policy should be complicated and hierarchical. But yeah, we always follow their requirements and maintain those data access policy.
Okay, I think we are almost at the end of the session, and I have my last comments for this session. And today, during this session, we learned about AI, and I feel like, today, especially today, my role today will be replaced by AI, because today I kind of focused on like nodding my heads and like introducing my expert speakers. However, it seems like our expert speakers, these speakers' role will be never replaced by an AI. They are so expert. So big round of applause for our speakers. Thank you.
Thank you to our moderator and panelists for the productive discussion. Ladies and gentlemen, as we conclude today's workshop, we will now proceed with the closing remarks. To officially close our event, we are honored to invite two distinguished speakers representing our co-hosting institutions. First, I would like to invite Mr. Hyun-soo Kim, Chief Director of International Cooperation Center at KODIT, to deliver his closing remarks. Ladies and gentlemen, please welcome him with a big round of applause.
Thank you. Good afternoon. I'm Hyun-soo Kim, Chief Director of the International Cooperation Center at KODIT. It is a great honor to deliver the closing remarks on behalf of KODIT as we conclude this two-day workshop on SME finance in Asia and the Pacific. First and foremost, I would like to extend my sincere gratitude to our speakers and moderators for sharing your time, knowledge, and valuable insights. My heartfelt appreciation also goes to all participants for your active engagement today and yesterday throughout the sessions. Over the past 2 days, we have had valuable discussions and made meaningful progress. I think we explored the role of public finance and credit guarantees in enhancing SMEs' access to finance. We also examined the challenges and opportunities of green and digital transitions, emphasizing the need for sustainable financing and digital adaptation. Now, it is clear that strengthening collaboration, refining policies, and advancing digital and green finance are key to ensuring SMEs remaining resilient and competitive. The next step is turning these insights into action. In this sense, I trust this workshop has provided policymakers and financial institutions with practical insight to shape effective SME support strategies. I also hope today's event will lead to many more opportunities for closer cooperations. Finally, I'd like to express my sincere gratitude to all organizing teams from ADBI and KODIT for your hard work in making this event possible. I wish you all a safe journey to home and look forward to seeing you at future event. Thank you.
Thank you, Mr. Hyun-soo Kim, for your warm and inspiring message. Next, we will hear our next closing remarks from Ms. Bo-young Jung, Senior Capacity Building and Training Specialist at ADBI. Please welcome her to the stage with a big round of applause.
Thank you, ladies and gentlemen. Thank you, all of you. On behalf of ADB Institute, I extend my sincere appreciation to all of you for your active participation on this SME, in this SME workshops. Over the past 2 days, we had the privilege of engaging in the rich discussions, exchanging insights, and exploring innovative strategies to strengthen the SME access to finance. On this occasion, I would also share my experience in working with SME finance issues firsthand, like all of you. Before joining ADBI, I was also government officials. I served in the Ministry of Economy and Finance in Korea as the director of budget division on the SME and Microsoft enterprises, especially during the pandemic areas in 2020. So at that time, as you all face it now, it was really unforeseen crisis, and we should work very tirelessly to turn this challenge into an opportunity for the further growth. So addressing the very complex puzzles, including the easing the financial constraints of SMEs while supporting their transformation towards the new growth engine, really requires very innovative solutions at that time. So that experience made me eager to learn how other countries were responding to the crisis. So this experience underscored the value of knowledge sharing, especially in policy development. As policymakers, we do not simply copy or replicate other countries' policies. However, by learning from the various experiences and from learning from other countries' experiences, we can adapt and craft very creative solutions that best fit our own context. So I hope this was the essence of events like this event. So I hope all of you got valuable insights from this workshop for your working going ahead forward. So before we conclude, I think I should summarize some key takeaways as the last speakers. So first, as we all know, the SMEs are the backbone of our economy, and ensuring their access to finance is very critical for their growth as well as our economies. Second, SMEs, the green transition and digitalization is now inevitable. So regulations like Scope 3 are reshaping the business landscape, requiring SME to adopt green and digital technologies to remain competitive. Third, the clear and consistent and well-coordinated policies and standards are essential for the effectiveness of green finance mechanism. So yesterday, the Yoshino sensei highlighted that. So standards such as ESG scoring, carbon pricing, and robust MRV frameworks are also very necessary, along with strong international cooperation and coordination. So, and also given SME's limited capacity and resources for transition, the targeted support, both financial and non-financial, from governments as well as from large companies through the supply chain linkages will be crucial. And last but not least, technology, just before we learned, particularly digital finance and AI present untapped opportunities to enhance SMEs' access to finance and also improve efficiency in financial support system itself, make operation more effective. So these are my short and well-known takeaways, but I think challenges lies in effective implementation. So I hope this workshop has encouraged you to reflect on and refine your strategy for putting these ideas into action. For your information, all the sessions are live streamed and recorded, and then you can access from the ADB website. Yeah, you can click the QR code, then you can see again all these sessions after you go back to your office. So finally, I would like to express my sincere gratitude again to all the participants and speakers for sharing your valuable insights and expertise. And I also deeply appreciate the leadership of two organizations, the Chairman Choi and Dean Sonobe. Yeah, they are not here, but their support made this event possible. So lastly, a special thanks to our colleagues at KODIT for their tireless efforts in organizing this workshop, and to my team, where it is, for their dedication and hard work. So please give them a warm round of applause. Yeah, thank you. And thank you all. This is the end of my closing remarks, and I wish you all have a safe trip back tomorrow. Thank you so much. Yeah.
Thank you, Ms. Boyoung-jang, for your thoughtful and encouraging message. With this, we officially conclude the KODIT ADBI joint workshop. Ladies and gentlemen, once again, on behalf of KODIT and ADBI, I'd like to extend our deepest appreciations to all of you for your valuable contribution. Your insights and engagement have made this event truly meaningful. We also look forward to continued collaboration between KODIT and ADBI. Thank you once again for being with us, and we wish you all a safe journey home. Thank you very much.